person and extremely humble. We have with us, most honorable Professor Krishnamurthy Subramanian. He's the executive director of at IMF, a professor, and many of you know in India and across the world, the Indian School of Business. And he was the India's 17th chief economic advisor between 2018 to 2021. He's been recognized by Prime Minister Modi for his brilliance, for his perspective, and most importantly, for his economic and policy matters. I think we've heard, so many of us have heard the word Thalinomics, the V-shaped recovery after COVID. And the most critical piece, really looking at the, where we stand today, I think a lot of credit, a lot of thinking behind this, where India is booming from that 5% to 7% and beating records now, and moving, probably marching to 8% as we move in year by year towards 2047. He has humble beginnings, and we've been sharing his amazing, interviews, and there are so many. It's so difficult to really select. So we've shared the NDTV, the beer biceps, and I've never met somebody most humble, and that range of really understanding the basics at a household economic level, to not only the national economic level, but understanding the geopolitics and the economics, international trade perspective that he brings in through his vast experience, and only becoming multifold as he represents India in IMF, which is so critical for us. He's been recognized again as a distinguished alumnus of IIT Kanpur and IIM Calcutta. And I think with that, I think, we're going to start this session. I would just want to say, I know that you asked me to call you Subbu, but I don't know why. I mean, at least here I need to call you Professor Krishnamurthy, because, many of us have been in awe. And also, the way you have really steered this whole journey of India moving and reclaiming the space. So for all the listeners, there's some basic rules just to let you know. We will be having the space for about 90 minutes or so. We will start with a basic Q&A round with Professor Krishnamurthy, and we will, of course, have some of our speakers also reflect and ask him questions. But we will also then open up the space for Q&A. He's kept a lot of time for us, which we're extremely grateful and fortunate. And and then let me also give another ground rule. Please retweet the space, quote to tweet the space before we get started, the way Professor Krishnamurthy has done, so that many people can join and benefit. This will be recorded. We will be sharing the link of the recorded space with everybody. And let me just acknowledge my two co-hosts. Uh, we have with us Prince. Prince is a well-known, co-host and hosting many important spaces. I definitely request you to follow him, because he's been doing a lot of space really on the Indian market and its, buoyancy and its surge. Aditya, I had a in my last trip to India, I met Aditya in Mumbai. Again, everybody knows Aditya is extremely celebrated, an investor. You see both, all of them on the television all the time. And it is great to have both of them joining us. And we also have our Vibhuti ji, who's based here in New York and Long Island, who's again been really taking the India journey and speaking to all different aspects. He comes from the banking background. So we will be having our three co-hosts, joining us and bringing that value. We also have speakers like Sandeep has been running the geopolitics in India. Avi and Ravi is based out of Scotland. Thank you so much, Ravi, another investor and a thinker promoting the India agenda. And I know that Brian will be joining us shortly. He has a doctor's appointment with his son. So with this, let me take off and give the floor to Professor, unless my co-host, do you want to just say a word, Vibhuti Prince, and Aditya? Vibhuti, do you want to welcome Professor?
Hello, Professor. You are warmly welcome from New York, Long Island, on a beautiful day, Sunday, Friday morning. Wanted to take the baton from Ravi to say that I will love to address you as Subbu, because in my lifetime I have interacted with lots of Krishnamurthis and Subramaniams, friends
That was
from all over the
wonderful.
place. I just wanted you to know that how proud I am of your accomplishments and credentials. Great to hear. Look forward to your thoughts. Just wanted to give a tiny little introduction about myself, that way back in 1991, whatever you were doing at that time, in the April of 1991, I came to the US with American Express Bank. I was in the corporate banking and private banking, and my job at that time was to market India's liberalization program here in the
Mm,
US.
mm,
So, pioneers get shot in the back. That goes the famous saying. But that was an amazing experience for me, because I realized how good we are as people, as culture, as tradition, as who we are. And that's the time I proudly say that I became a better Hindu, a better Indian, and a better human being after coming to America. So, so that said, this is your floor. We are deeply interested in listening to your thoughts. And the one thing that I keep pushing forward is India needs installation of performance-based culture if we have to reach the trillions that we deserve and we have the potential to do. Your thoughts as you go forward on this, each one of us here, and I proudly say that we belong to a band of a few good men and women, of course, who are performance driven. We are who we are not because we looked good. As I told some of my friends, that American Express did not send me to US because I was tall, dark, and handsome. They sent me because I did something for them, right? So that's what is important. Performance always matters. Bedroom, boardroom, battlefield, and wherever.
Thank you so much, Vibhuti, and
Thank you, Professor.
thank you
All
again.
yours, Subbu. Thank you.
Great. I don't know, Aditya and Prince, do you want to say a word because you're joining from
Yeah,
Mumbai and Delhi,
hey Ravi.
Prince?
Hi, Professor Sir. Great to see you here and look forward to the insights which you would be sharing during the course of this session and really look forward to that. Thank you.
Aditya?
Hi, Professor. It will be great to understand your views on India, and I've been reading your views on India as well. And as we truly believe that the next not only 10 years but 20 years belong to India, so over to you to set the context, and then we'll take it from there.
Excellent.
Thank you very
Professor,
much.
over to you just to say that to everybody. We'll be diving down into the historical perspective and we have a lot of time. This will be extremely exciting. Share the space with everybody. Back to you, sir. Over to you.
Thank you very much, Ravi, Vibhuti, Prince, and Aditya. Let me first say I'm quite humbled to hear the kind of words that all of you have spoken. I genuinely feel we're all common people who were put in positions of responsibility, and I think it's a privilege to be able to get to contribute to the nation. And on that count, again, Ravi, let me mention that. See, the reality is that advisors can give advice, but I think it is the decision makers that make the decisions, and therefore, absolutely, maximum amount of credit should go to the Honorable Prime Minister, to have taken a lot of risks. I think India is fortunate that we have somebody who is willing to listen, willing to learn new things, willing to engage with the public regularly. Because in a democracy, reforms and good economic measures have to be articulated to the people. And I think so. A lot of credit does go to him for having taken the decision. So with that, let me, Ravi, you sort of flagged the historical context, and I think it's really important and those of you who might have seen the economic survey, 2019-20 economic survey on ethical wealth creation. I want to refer to that, and one thing that I actually have felt, I think many of you shared this perspective, that I think in our younger age, we often heard people from from the earlier generation being far too enamored by ideas from the West, and somehow maybe because of my upbringing, maybe I don't know what factors, but it did make me uncomfortable because I mean I was told that we come from a civilization that has actually thought so deeply about various things, including life and after life, before life, and some of the deepest thoughts have come from our civilization. So even when I was, and by the way, Vibhuti, when in 1991 when you came to the US, I was actually, that was when I was doing my undergrad, my first steps into academia, and remember reading, sitting in the the reading rooms of my hostel and reading about liberalization, and that was my first exposure and sort of interest in the economy. But I did remember actually when I would hear people from the previous generation sort of seem to be far too enamored on the one hand with Western ideas, and on the other hand somehow not acknowledge a lot of the contributions that India seemed to make. It did create discomfort, and somehow and I'm fortunate enough that I got the opportunity to talk about what India really has been, even from an economic perspective. And I think with that background, let me share that the first chart that we had in that survey was from a book by Angus Madison, who went and painfully tracked the contribution, of different, nation states, different parts of the world's geography to GDP. And what he showed was something that was, very consistent with the way I thought about India, about our civilization. What he documented, I think a lot of people didn't know, but I think it's very important that now all of us know about it, which is that from 180 to 1750 AD, in other words, 3/4 of known economic history, India was the an economic powerhouse, accounting for at least 33% of world's GDP. That's 17 and a half centuries on average, accounting for about 40% of world's GDP. For me to sort of wrap my head around how much of an impact this was, I compared with the United States. When I came for my PhD here in 2001, I used to oftentimes keep thinking about, because I had a very good inkling I would go back to India, saying, why is something happening well in the US but not in India? And so we all sort of grew up knowing that the US is the economic powerhouse. But if when we reflect back, it's after the Second World War that the US really sort of became the economic pinnacle, reached the economic pinnacle. So about 80 years, right? And just compare. So 80 years versus 17 and a half century. That's 22 times larger, right? And on average, the contribution of the US during this period of economic primacy, contribution has been about 25% of world's GDP. So do both the comparisons. 80 years versus 17 and a half centuries. Contribution of of about 25% on average to world's GDP versus about 40%, and at its peak reaching half of world's GDP. And then the thought struck me that this kind of of dominance, economic dominance for 17 and a half centuries, and some about 25 times longer than that of what we know about today, the US, could not have manifested through accident. It has to have had a tremendous amount of depth of economic thought. And that's what, when where I was fortunate enough to have actually been sort of told about the riches, the riches of wisdom that lied in many of our literature. And so I went and had the opportunity to sort of read about Arthashastra, read Tirukkural. My father used to keep mentioning down south Tiruvalluvar 3,500 years back, wrote this in the north, Arthashastra. And both of these actually, and the learnings I took away from there was that we, were a civilization that prided entrepreneurship, took pride in private enterprise, and the socialist era that we had, after independence was actually, completely antithetical to our DNA. It's like it was like, putting a square peg in a round hole, and in some sense, not thinking carefully about our own DNA. I mean, I'll give you a very, very sort of simple example. Many of us in our homes, we write, in the altar that we have, we write Shubh Labh. Shubh in Hindi basically means something which is auspicious. Labh is profit. So it is in our DNA to basically add value to society, profit by doing good. That is what made us, the economic powerhouse that we were. And post liberalization, you talked about 1991. All of us have had these experiences. I think is a demonstration of the same, that when we actually tapped into, that powerhouse of entrepreneurial energy that Indians have, that we were basically able to unleash the economic power. And I think that is what, there's a long way to go. We are, I think, the next 25 years are definitely 20-25 years. The Honorable Prime Minister has called it Amrit Kal, and which translates in English to be sort of like a golden period. I have no hesitation about that. Happy to talk about it. But I think this is something very important to take into account. I'll end by one more, this set of questions by giving one more example. Many of us talk about, I mean, we've been taught Shakespeare, we've been taught various pieces of English literature, and in this discovery, the process that I went through, I came to know about so many. We look at our temples, look at the civil engineering, the metallurgy, the kind of concepts that we, and those of you who are interested, I actually highly recommend this book, The Imperishable Seed, which talks about the contributions to mathematics, by India, whether it's trigonometry, whether it's calculus. Um, think about the kind of civil engineering, the kind of construction, metallurgy, etc. That Padmanabha Swami temple in Trivandrum, on summer solstice day, the windows that are there, actually the sun goes through each one of them. And I think about how profound the knowledge must have been to be able to bring about such kind of construction. And there are temples. I'll give one example. The Nellayapar temple in near Madurai, for instance. The pillars there, you go and knock the pillars. There's one pillar which has 7 walls to it. You knock each one of them, it actually produces the musical octet, sari gama padanisa. You go to the next pillar, you knock on it, actually the sound of of tabla comes, of mridangam, actually mridangam, not tabla, mridangam. And then you go to the next pillar, you knock on it, the sound of ghatam. And so I mean, it's just it's and yet many of us actually through school, we were made to sort of be in some sense apologetic about being an Indian and not be proud of being an Indian. I think that is something which actually has generated, I mean, it sort of generated a dissonance. And part of our efforts, all of us, is to actually make the next generation realize not jingoism, but actually just recognition, so that because it is my belief that without self confidence, whether it's an individual or a society or a nation, without self confidence, one can't basically be sort of very successful. So this is a process of that discovery of of who we are. And I'll end with just one last example, I think, which I find it very profound. In the 19th century, there was this palindromic sentence that was discovered. We all know about palindromes. Malayalam, for instance, the word is a palindrome. The sentence in English was, able was I saw Elba, a 6-word palindromic sentence created in the 19th century. Contrast that to basically a palindromic composition, which is called Rama Krishna Viloma Kavyam, by this poet, and this is in the 14th century, by Devagya Surya Pandit. It's a 400-word composition, palindromic composition. When you read that 400 word palindromic composition, it is the story of Rama. You read it backwards, it is the story of Krishna. The two most iconic talismanic characters, in Indian civilization. This is a composition that, when you read it forward, story of one of those talismanic characters, read it backwards, it is the story of the other talismanic composition. Just compare. And actually, again, just as a comparison, the idea, able was I saw Alba, there it's almost childlike. There isn't much profoundness to it. But in contrast, 400 words, 6 words versus 400 words, and the story of one talismanic character read forward, another read backwards. This is the civilization that we come from. And so it really is important for all of us to to basically just discover who we are as a and learn from that history to be able to actually implement things in the future. So I think Vibhuti mentioned about merit. This is just an effort to actually recognize the merit that our forefathers had. In fact, I think I have absolutely no hesitation in saying that our forefathers were real kick-ass, real compared to us, and so we really owe it to them, for the kind of profoundness with which they thought about life, about the economy, about society, for us to at least recognize what they did. And I think on the economic front, going and recognizing a Kautilya or a Tiruvalluvar, these are I think very important. So with that sort of initial thoughts, let me pause and wait for the next set of questions.
Prince, do you want to go ask a question then, Aditya? Are you able to hear Prince, everybody?
No, I can't hear Prince yet.
Maybe Prince, we can't hear you for some reason. Prince, are you able to take the next question? Okay, so I think the next question that was coming from Prince, before we move, was really about looking at the state of the Indian economy today. And Aditya, do you also want to ask your question so that Professor can take that, Aditya? Okay, Professor Krishnamurthy, if you can just really tell us, we now, as you gave the historical perspective and talked about this, and by the way, everybody, we have pinned those important points, the 2019 economic survey. Again, you'll see the link to it. We highly encourage you to look at that. And we've also pinned the historical graph that Professor was speaking about, the figure one in the economic, and also the historical perspective of Kautilya Arthashastra and Trivarur. They're both on these. So really encourage you to retweet and share that widely. We're so lucky that we're having so much of information right here. So the question really is, what is the state of the Indian economy today? Over to you.
Yeah. So there are a few ways in which I would like to answer this question. So the first, let me provide the perspective of just look from a macro perspective growth. So yeah, I wrote an article in the Times of India about a year or so back, where I had I'd be happy to maybe look at it, search for it, and tweet it. Maybe you could add it to the space later. Where what I had plotted was the 3 year economic growth, 3 year, which is during COVID. So taking why 3 year, because take into account the decline, worldwide there was a decline in GDP in the COVID year, then it went up. So looking at a 3 year perspective then takes into account the decline and the and the growth and the change in inflation, and change in inflation compared to historical average. Because one of the things that a lot of advanced economies did was they actually spent fiscally expanded significantly, and that's we economists think about it. If there's a lot of money chasing only so much goods, right, then there will be inflation. So what this chart showed was that India, among the top 10 economies, was a positive outlier. And I think that the macro numbers themselves reveal growth after COVID at least 7% plus. This year, the growth projection by the NSSO is 7.6%. Other agencies recently, Fitch came up with an assessment. The IMF will come up with its assessment in some time. I think many of these will actually be closer to that. So I think in a global economy that is struggling to grow at on average about 2%, even about 1.5%, struggling to grow at that rate. India, growing at 7% plus, I think is the first fact that needs to be acknowledged. You know, and now the second dimension that I want to bring is it sort of follows from this, which is, let's contrast how India did, during the previous crisis, and how India did during this crisis, to learn about, how well the economy has been managed by the decision makers. So during the global financial crisis, which was the previous crisis of this kind, do keep in mind, this time a once in a century pandemic was followed by a war, the Ukraine war. So it was a twin whammy, double whammy, of crisis compared to the global financial crisis. So in other words, the intensity of the shock that hit the economies world over was much bigger this time around. Keep that in mind. So in the global financial crisis, India became part of the fragile five. While initially India did not feel as much tremors from the global financial crisis, but we were fiscally very profligate. Our fiscal deficit to GDP ratio compared to peer economies was about 3.5 times. I've actually written about this, tweeted about this on and both on LinkedIn and Twitter. So these are facts from which I'm speaking, and that led to inflation. Inflation of double digits, inflation in double digits every month for 18 months. Let me repeat that. Every month for 18 months, reaching a peak of 18%. And that without a supply side shock. I'll come to that. COVID itself was a big supply side shock, as I'll explain a little later. But combined with that, the Ukraine war, there was no such supply side shock during the global financial crisis. And yet we had double-digit inflation and current account deficit touching close to 6% of GDP. The FDI, if large amount of large decrease in FDI, FPI, outflows, and investors put their money where their mouth is. So on each one of 12 macro indicators, India did poorly during the global financial crisis. In contrast, now, despite the crisis being such a intense one, as I said, the supply side and demand side shock of COVID, and then the Ukraine war, India has managed to have 7% plus growth with inflation that sometimes on some months has gone beyond 6%, but has been the inflation has been about 5%, slightly more than 5% on average. This is compared to a historical average. If you look at the data from 1960 to 2020, India's inflation has been about 7% plus. So compared to that, India, despite this, very intense crisis, India has recorded inflation that is actually significantly lower than historical average. When other economies, advanced economies, let's take the US as an example. Inflation historically in the US has been about 2%. And yet during this period, the US experienced actually anywhere between 3.5 to 4 times historical average. Germany, Eurozone, all of these had much higher inflation than the historical average. So that gives you a second perspective on how well India has done. And here I want to just explain why we did. It was not an accident. I remember sort of agonizing during in March, April 2020, that we all were taught in our PhD programs that every economic crisis is a demand side shock. That all of us knew. But I remember actually sort of agonizing that in this crisis, though, governments are asking people to stay back home. They're locking down the economy, and India needed to do it given the health infrastructure. It was an important part of the health response to the pandemic. But that had to mean something economically. And about after agonizing for about a couple of weeks, then it dawned on me that this will mean a big supply side shock as well, that there will be production will decline and parts of the supply chain will get disrupted, and they'll therefore mean a huge supply side shock. So without going into details, India's economic response during COVID was very different from that of the advanced economies. Advanced economies primarily did demand side measures, and that too actually they spent like there's no tomorrow. India was far more sagacious in the way it approached, made sure that the bang for the buck was maximized on the demand side, and also did supply side measures. And here, let me, so that our the listeners appreciate the crisis, how we approach the crisis, how we had entered the crisis. There were declines in the sovereign rating outlook because of growth decline. The growth decline itself, and I've written about it, was because of the overhang of the of a lot of the financial sector problems. So because of the growth decline, ratings outlook decline, and we still are triple B, so just investment grade. If the ratings outlook declines had followed, had been followed by a rating decline, we would have been non-investment grade. You can imagine the kind of capital flight that would have happened. So we needed to make sure that growth was brought back, but at the same time, we could not have been fiscally profligate. We don't have the luxury of a reserve currency, like of the dollar. So we had to, so a very difficult balancing act where we had to bring back growth, but without being fiscally profligate, and that's what India has managed. In contrast, during the global financial crisis, the economy entered the crisis was actually in very good health and came into bad health. Here we entered with challenges, but we've come out in much better health. Now, the third perspective that I want to actually share is, so these were both macro perspectives. One in terms of growth itself, growth, inflation, current account deficit, FDI, FPI, etc. Second, in terms of how we handle the crisis, why we've basically come out this way strong, during the crisis period. The third is a more sort of a micro perspective. People will talk about, those that are sort of especially the critics will talk about things like inequality, job creation, poverty, etc. And it's good that now data has come about. The recent consumption expenditure survey that has come, and that compares the 2020-23 consumption, per capita consumption, vis-a-vis the 2011-12. And my predecessor here at the IMF, Dr. Sujit Bhalla, has written a nice piece in the Brookings, and based on that, actually, and the data clearly shows that poverty decline has been by far there's been a historic decline in poverty during these, from 2011-12 to 2022-23. And he addresses as well, some critics who actually, I mean, where did not want to actually acknowledge this, said, oh, there are methodological problems, etc. And he clearly addresses there are no methodological issues in doing the comparison. So there has indeed been a significant decline in poverty, and inequality as measured using the Gini coefficient for both rural and urban areas has declined. So poverty has declined, inequality both rural and urban has declined, and employment, and this is something which I've actually tweeted multiple times on, and I want to use this space to say a lot of the criticism that comes on employment is using the unreliable CMI data. When I was the chief economic advisor, and even now, even when CMI would come up with good news on employment, I would not trust it, because and there's a paper of mine, I've put it on LinkedIn as well, which goes into details why the survey methodology of CMI is suspect. So if those who want to basically poke holes typically use the CMI data, but as I don't want to get into the technical details, but it is unreliable data, and so I don't trust it. In contrast, the NSSO's data, PLFS, shows clearly that when you look at salaried individuals, even compared 2017-18 to 2022-23, there has been an increase of about about 3.5 crores new salaried individuals, and especially in the in the among the youth, which is basically the 18 to 30 group. One of the previous chief statisticians, TCA Anant, has written about it, that job creation in this segment has been far more than even population growth in that segment. So, when you look at quantity and quality, employment also has, done well. So, to summarize, macro growth actually 7% plus, with inflation that is actually less than historical average. Both of these in a global context where the global economy is struggling to grow even at 1.5%, and inflation that has been 3.5 to 4 times historical average. And when you look at poverty, inequality, and employment, there will be those that will quibble, and that's inevitable on any macroeconomic indicator. But when you look at the reliable data sets, I think it is clear on these three as well. India has done very well. So that's my summary of how the economy stands today. It's in good health. But I will mention, I'm an impatient person. Actually, we need to do more. There are lots more reforms. Manufacturing sector is picking up, but we need to do more reforms there. So I will not claim everything is hunky dory. There needs to be more work that needs to be done. But if you use data and you don't have an agenda, I think it is very clear that a lot of the positives of the economy, need to be acknowledged.
Thank you very much. That was very, very detailed and extremely valuable. So, Prince, are you able to ask your question if you go take the speaker?
Yes, yes, sir. So although Sir has very rightly touched upon the positioning of India as far as global value chain is concerned, so on the top of that, Sir, you were also telling about there are always challenges in the longer journeys. But apart from that, I mean, the scale which China has achieved over a period of say 20, 30 years, what do you think, like when we could be in a similar situation as far as scale is concerned, be it manufacturing and other areas?
Can I sorry add to that? Can you also say that often India and China are compared, but I think one study that you did was really looking at different economies since the World War. If you could also build that into the answer.
Yeah, sure. So let me first. So when we compare with China, I was just looking at the data now. So India's per capita GDP today in dollar terms is almost identical to what China's per capita GDP was in 2007. So we are about a decade and a half behind in terms of per capita GDP. And part of it is, of course, China started growing from the 1970s, and in fact, by far, in the 2004 to 2014 decade, and good part of it before the global financial crisis, China was growing at 12, 13%. And so when people basically some of those who say, oh, we grew very well in the 2004 to 2014 period, that the average growth was high primarily because of the period during the before the global financial crisis. And as we all know, a rising tide lifts all boats. But on a comparative basis, we really lost steam compared to China during that 2004 to 2014 period. So that's something which we have to actually catch up. But I am quite, confident that when you look at the demography, India is really entering a very sweet phase into on its demographics in the next two and a half decades. China's demographics, which had been a tailwind so far, is likely to be a strong headwind going forward. And I think there's a lot that has been written on this. But I think going forward for India, this will be a very good tailwind. There is, of course, one key aspect that we have to focus on, which is job creation. And I've actually, I'd written about this in the 2018-19 economic survey. I'll come to that just in a minute, but let me first answer the question that Ravi posed. So in the 2018-19 economic survey, we basically tried to articulate what should be the broad economic strategy for India for us to become a $5 trillion economy and then move on further and become 10 trillion and beyond. Uh, what we did was we went and analyzed every country post the Second World War that grew at at least at 5%, in real terms, not in nominal terms, real terms, but not just for a year or 2 years or 5 years or 8 years, for at least a decade. So that was the filter we applied, which was, growth of at least 5% in real terms, but and at least for a decade. So the countries were left. In This is after the Second World War. We then went and analyzed what is it that led to this kind of growth. And acknowledging, in fact, at the macroeconomic level, one has to be careful because every variable is both a cause and an effect. And for the benefit of our listeners, I should explain this, which is investment this year can contribute to growth this year and in the subsequent years, because investment has lagged effects as well. And growth then increases income, puts money in the hands of people, adds to consumption. So investment this year can actually affect consumption in the future. But at the same time, consumption, in the past, also affects investment now, because when firms look to invest, private investment, they look at, what are the opportunities for us to increase demand, and so at the macroeconomic level, when you look at it in a dynamic perspective, we have to be very careful, because every variable is both a cause and an effect. And therefore, in some sense, like the nine pins, the way which is that one pin that makes the other pins fall, that has to be econometrically investigated. And we did that by taking into account. And what we found was that each of these countries that grew at 5% plus, on a continuous, for at least a decade, did that by encouraging private investment. That was the main idea. And therefore we coined this term virtuous cycle, starting from private investment. Virtuous cycle because when private investment increases, that leads to growth, and then that leads to money coming into the hands of people, then who basically use it for consumption. Anticipating more consumption, firms invest even more, and so on. That's how the virtuous cycle sort of builds on itself, in a symbiotic manner. And that was the sort of the insight we got. And I think China is a brilliant example of that, at least up until recently. At its peak, China's the investment to GDP ratio was 47-48%, and even during the global financial crisis, India's peak was about even before the global financial crisis, when the economy was basically benefiting from very good global tailwinds. Our investment to GDP ratio was about 37-38%. So even if we get to 37-38%, I think that's good. We need to really focus on investment. That's why the government's focus on infrastructure and capital expenditure is something that is very useful. I need to take a short segue here to actually rationalize why infrastructure spending, capital expenditure is very, 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 very good. It's a very good way to spend the taxpayers' money. And the simple insight I want to give is, if let's say the government takes 1 rupee of taxpayer money and spends it on revenue expenditure is subsidies, and other those that don't create assets in the economy accumulates anywhere between 92 to 95 paisa. In other words, spent a rupee, but the economy got added only 92 to 95 paisa. So said differently, 6 to 8 or 5 to 8 paisa gets lost, in when it's in revenue expenditure. But the same rupee, when it is taken and spent on capex, it accumulates anywhere between 4 to 6 rupees. So if the fisc spends a rupee and accumulates 4 to 6 rupees, depending on the nature of the capital asset that's been created. So I mean, think about it. Actually, would you or I ever go and invest? Put a rupee and want to take 92 paise or 95 paise? Of course not. Would we want to go and invest a rupee and take out 4 to 6 rupees? Of course, yes. So if that is good for an individual taxpayer, the same logic of basically where the investment yields the maximum bang for the buck, it's good for the sovereign, for the macroeconomy as well. That's why capital expenditure emphasis on that is very good, because it crowds in private investment as well. Now, the last part, in answering this question, which is on manufacturing. Uh, you will hear commentary which is saying that, oh, India needs to only focus on services. India has missed the manufacturing bus, this, that, and the other. many of these aspects I'm actually covering in my forthcoming book. But I just want to give you a gist. The reason India, if at all India has actually lagged behind, I will not say that India has missed the manufacturing bus. It has lagged behind because of policy failures. One can't blame our entrepreneurs or the private sector for manufacturing not picking up. It is because when one thinks about the manufacturing sector, or production in manufacturing, what are the inputs to manufacturing? You have land, labor, capital, power. You have basically, you have to transport what you produce, and on each one of these, land, labor, capital, transportation costs, power costs, policy has been actually has not paid enough attention. In other words, while we liberalized the product markets in 1991, the markets for factors of production like land, labor, capital, all these, we have not made them competitive, we've not reformed them adequately, and therefore our firms, Indian manufacturing firms, face higher costs on each one of these inputs, anywhere between 15 to 20%, maybe more. And you add them up, you add each of those 5 6 inputs that goes in, and if you're facing 15 to 20% costs on each one of these inputs, then the Indian firm is actually looking at about double the cost of its global peer. How can it compete then? And so it is a policy failure. And I actually, those that comment about, oh, India should not go into manufacturing, they never talk about, what is the policy failure, why manufacturing has not picked up, because it is policy failure. I mean, I will tell you honestly, when the when the then government came back to power in 2009, I was really hoping, we had an economist as the prime minister. I'm sure he would have understood this aspect, and that I thought there would be reforms that would happen on the land, labor, or capital, etc. In contrast, what we got was something completely exactly opposite of that expectation of mine. So it is really important for policy to double down, on manufacturing, and remove the various bottlenecks that firms face, because we're competing with countries who not only do they actually have they used policy to remove these difficulties, they also support and in some ways subsidize the cost for their firms. So which we really have to continue. And this is where some of my wish list for what needs to happen, the labor reforms, bill, the 4 labor codes actually were passed in parliament in 2020. The subordinate legislation rules for that needs to be followed up, needs to be done, like the CAA, where the rules, the law was passed about 2.5 years back, and now the rules have been announced. In a similar way, for labor reforms as well, this needs to be done. Ease of doing business needs to be enhanced even more. While we've certainly improved significantly on that, but we still have to go, progress significantly, especially on taxation, for instance. And I think that's something which is very important. We need to continue, improving the market for capital. A cost of capital for our firms need to be reduced, and that's where focus on banking, is really important. Similarly, there has been progress in the power sector. Power has become more reliable, but a lot of the cross subsidization which industry pays for, through higher power costs, actually needs to be tackled. Power sector reforms, those states that want manufacturing to actually to pick up significantly in their states, need to address these power sector problems. The discoms, the governance there needs to be addressed. And I think transportation and logistics is being, I think that there's very good momentum on that. I think we don't need to do, we just need to continue what we're doing on the transportation and logistics part, railways, roadways, etc. But I think power, land, and land reforms also states need to be doing. Labor bill, actually, as I said, legislation needs to be passed. These are all things that will really encourage our manufacturing firms. And the final part, which actually I mentioned about the phenomenon of dwarfism. I think this is where our policy needs to really be, understand the key problem, because I think the question that was asked was about scale. The simple fact is that most of our firms in India are too small. They actually grow, in age, but they don't grow in size. And economies of scale is one of the key ways in which in which average costs are reduced. And when a firm is too small, it cannot reap economies of scale and thereby reduce its average cost. This is because a lot of our laws actually encourage firms to remain small. And because I mentioned about labor reform, I'll use that as an example. In the previous regime of, when we had, not only did firms have to actually face so many laws at the federal level and at the union level and at the state level, but if they became slightly larger, and more than 100 employees, and 100, by the way, in a global context is actually still very small, but in the Indian context, if a firm has more than 100 employees, then it actually has to face so much regulation. So what does the promoter do? The promoter says, okay, once I reach 95, 98 employees, then I basically will start a firm in my wife's name, maybe in my brother-in-law's name, or maybe the driver's name or the maid's name. And as a result, you have five firms, all of which are about 100 employees in size, rather than having one firm that has 500 employees. That one firm that has 500 employees can reap economies of scale, but these five firms, each one of whom are actually about 500, are about 100 employees, they cannot reap economies of scale. And this is where, therefore, our policies really have to actually encourage firms that grow. And I think I'll end this part with the following example. In the 1980s, Infosys started in the 1980s, and at that time, a relative of mine also had started a firm. Today, when you look at, Infosys actually employs lakhs of people. In contrast, this relative of mine, actually, the firm did not grow very big. So now, look, this example suggests who is providing more employment. It is the firm that actually, grew to become really big. It's, in other words, the child that became a giant, that is the one that really produces the maximum amount of employment. So in order to really utilize the demographic dividend, the sweet demographics we're going to enter into the next 20-25 years, it is really important for us to actually create jobs in manufacturing, for which each of these aspects, each of these factors of production needs to be addressed. But at the same time, this phenomenon of dwarfism also needs to be addressed, so that we encourage firms that are that grow and thereby hire more people and create good jobs.
Thank you so much. This was so detailed. I mean, you can just go on and we can keep listening. So let me give the floor very quickly. I don't, Maccabi, you want to say something? My brother here from Israel. I know that before I give to the co-host, Maccabi.
Ravi, excuse me, Ravi. Thank you for sending me the invite. I haven't seen and spoken to you for a while, so before Shabbat comes, I wanted to just jump into the space and say hello to you, and I hope you and your family are all doing good. But I'm sorry, Professor. I just wanted to. I didn't mean to hijack your speech, but I always, because of Ravi, because of everything happening here in Israel, I had no idea how much support we have had from the Indian community. So while I had the opportunity here right now, I wanted to thank all of the Indian community who have been standing with us during these difficult days. I know you understand what we're going through. And so I just wanted to say thank you. I did have just a quick question for the professor, and that is vis a vis manufacturing and how India can benefit from that. Is the main competition really China just because of the number of people that China has and the wages that they can pay their workers versus what the laws India has and their workers?
So first of all, thanks so much. I think for India has always been a country that has rushed to help. In every country, that is facing difficulties, and I think Israel is a very, very good friend, of India, and so we really empathize with the with the difficulties that you are experiencing there, and so happy to I'm sure I speak on behalf of all Indians, in being happy to help. On your question in terms of competition, I, right now I think it's smaller countries who are who are sort of more salient competitors in some sense. Vietnam, Thailand. On textiles, for instance, Bangladesh. You know these are the countries that India has to compete with. But I think, and this is something which India must, if we go ahead and do the reforms that I've spoken about, that because of the very large population that we have, like China, labor costs in China, for instance, didn't, or wages in some sense, didn't rise to levels that made them sort of made firms, manufacturing firms who want to set up shop in China. It didn't become uncompetitive for a long while, and that's because they had a very large population. India has the same competitive advantage. In a smaller country, wages will rise much faster, because the supply demand mismatch. But in a country like India, wages can continue to be at competitive levels, for the next 2.5 decades. So in that sense, from a scale perspective, and the resulting, sort of impact on wages, I think India would definitely want to make it as attractive as a China. But at the same time, on other aspects, of in terms of ease of doing business, laying out the red carpet for manufacturing firms to come and set up shop, I think we do have to compete with some of the other smaller countries as well.
Thank you so much for your time. Good evening and good afternoon to everybody. Wishing you a blessed weekend and a safe weekend. Thank you, Ravi. I'm sending you my love. Take care,
Thank you.
everybody.
Thank you. So let me, before we go to the hands, can I please request Aditya and Vibhutiji if you want to ask questions, and then we'll go to the hands. Aditya, Vibhutiji. Yeah, Aditya, you can go, please. Aditya, you're on mute. So while Aditya and Vibhutiji, Vibhutiji.
I'm ready. I'm ready to ask. Thank you very much. For all the wonderful explanations and historical perspective you knit right now, Subbu. So going forward on that one element, you use the word demographic dividend. So what must the Prime Minister do now, the policy perspective, to enrich the demographic dividend and realize it to this full potential rather than it becoming a demographic burden at some point in time?
So, we touched upon this particular question, in our previous discussion. So, I think the most important part of ensuring that the demographic advantage that we are entering into is realized is creation of very good jobs, high quality jobs, and I think there, the growth of the manufacturing sector, the Make in India and reforms, as I said, the first item on agenda I would recommend is, within a few months, the labor law bill, that has been passed. For that, the subordinate legislation rules need to be brought out. I think, if I remember checking with the labor ministry, talking to the secretary, about how are the how are the rules, framing of the rules coming along. So my sense is that, work on this has been happening, and so this should be real priority. At the same time, I think, some of the ease of doing business, continuation on, especially on the taxation side, I think needs that would be a second priority. A third, and I think this is very important, is to ensure that credit to the to for investment purpose of private investment, is enhanced by banks, but without a repeat of the non-performing assets problem that we had in the previous round, starting from 2008 2009 till about 2013-14, and then of course the overhang of that, which impacted growth. So I'll give a specific example here to highlight how important credit creation in the economy is. This is something which I cover in my forthcoming book. We've covered it in my previous book, Money, a Zero Sum Game, as well. Let's take India and South Korea. And go back 6 decades, 1960. Look at the period from 1960 to 2020. In 1960. The private credit to GDP ratio in South Korea was 6%. In India, it was 8%. In other words, India was about 33% ahead. And the private credit to GDP ratio is a good measure there because both economies are bank dominated. You don't have corporate bond markets, etc., which are that large. Fast forward 60 years, 2020, you look at the same ratio. The Indian private credit to GDP ratio is 58%. Yeah, South Korea is 178%, actually about 180%. In other words, three times as much. So they were behind us. They were 6% in 1960. We were 8%. And from there, they actually went to close to 180%, three times as much of ours. And what is the benefit of that? You look at that, they basically grew their manufacturing. They grew exports significantly. So, I think about it, and actually, if it had been the reverse, right? Instead of us wanting to buy, the Daewoo cars or the Samsung phone, if it had been the reverse, it may have been the case that the South Koreans may have actually wanted to buy geophones, or maybe the Nano car, or the Tata Indica, etc. So that sort of illustrates a kind of opportunity, and so among these three, that I would say that each of these factors of production, labor, land, power, capital. I would say capital is by far, really important, and that's where I think the banking sector, especially public sector banks, one of the aspects that is important to understand is that our public sector banks really, do not specialize as much, in various areas of lending. In some sense, if I can put it this way, that if you step into a public sector bank branch, right? A lot of us now don't visit branches, but if you step into one of them, you have to sort of, they all look very similar. You have to come out and read the board outside and say, is this bank X or bank Y? So in other words, over 60 plus years of post nationalization, they've all become too uniform. Their comparative advantage, their USP, unique selling proposition, that's something that has actually not been emphasized as much. I think that is important, that there should be some banks that actually develop expertise, maybe in lending to semiconductors, for instance. That's what they have, professionals who can really assess projects on semiconductors really well and lend to semiconductors. And maybe there should be some other firms that actually are really very good at textiles, actually being able to give credit to on textiles. Some firms in maybe in the logistics sector, maybe some in tourism, etc. So this is something which is really, really important. A fourth, which is related to the that is important, is Exim Bank of India. If you look at China, the Exim Bank played a very important role, in furthering, Chinese exports by actually giving credit, and in international trade. Uh, Credit, actually short-term credit, is something that is really important. and therefore having the Exim Bank of India develop that expertise to be able to really ramp up its credit, and I think that is really, really important. To summarize again, actually, all the factors of production, as I said, labor laws, the rules need to be passed. The taxation, especially ease of doing business, needs to be, especially on the taxation side, should be worked on. Credit, I think both specialization of the public sector banks and also the Exim Bank of India, actually equipping it to really be able to give credit for exports, and at this at you know at the same time, it is also important to focus on power sector reforms, land reforms. These need to be done at the state level, but I think states need to be pushed. At least those states which, where the central government and the state government are sort of politically aligned, those states need to be pushed to be able to do these reforms, because when it's not rocket science. If these factors of production are enabled, and therefore costs of production go down for manufacturing firms on each one of them, then manufacturing will pick up. And I think the evidence, you see some of the reforms that are being done, the focus on infrastructure, some of the improvement in power sector, etc., those are starting to show signs, which tells you that this will work. This is already working, will work, and therefore we need to redouble on this. That's what I would lay out. And I would, if if basically as a wish list, I would say in the very first year, all this needs to be done, because that's when typically the first 6 months to 8 months, or a year, is really the honeymoon period for the new government, and that's when these reforms need to be really pushed.
Thank you so much, Subbu, for explaining it so well. I had heard the previous question that you had answered. Effectively, if I may just summarize it, it would mean that somewhere along the line, we need to develop a culture of capital efficiency and capital effectiveness, and everything that goes with it. So thank you very much for saying what you said. And, I'm deeply honored to listen to you today, and very delighted to see that India's future is safe in young hands like yours.
Thank you.
So thank you very much. God bless.
Thanks for the kind words.
Thank you, Vibhuti. Aditya, are you able to ask your question? Otherwise, we'll go with a round. Aditya? So I will reach out to Aditya. I think there could be some issue here, but we have an order, just to say that we have Avi, then Sandeep, then Korang, and then Atal. Avi?
Thank you very much, Ravi and Vibhuti ji and Aditya, for organizing this wonderful space. And what an honor to speak to you, Professor. Thank you so much for being here. And as you can see, just to give you a little background, a lot of people you are seeing here are not just the numbers, they are also influencers. So whatever we are learning from you, this will be, it will go further. So the words will spread, and the effect of the space will multiply. And therefore, I wanted to really congratulate the organizers and you for spending time with us. With that being said, I really want to bring up to the good news that India's ranking has improved in Human Development Index. As you can see, the recent report has been submitted by UNDP. It actually highlights the India's, one of the major contributing factor, and one of the great news which I was very, very elated to see. The women participation has increased in economy, and I know that you have been working tirelessly as an economic advisor. What were the policies that you actually you brought in, and now you're also seeing that can further embolden this momentum? Because the GII value, the gender inclusion value, is zero point 0.4, which is better than global and South Asian average. So I wanted to hear your take on this. And there's one more question, but I'll wait till for the next round. Thank you, sir.
Yeah. Firstly, thank you so much for such wonderful and optimistic words. I must commend you for, I think, bringing this very important fact to attention, which is the increase in the female labor force participation rate. And for the benefit of our listeners, I must actually mention, let's just look at the data. From 23.3%, which was what the labor force participation rate, female labor force participation rate was, in 2017-18. This is rural and urban combined. So about 23% in 2017-18 to 37% in 2022-23, right? And when you break it up by rural and urban, the rural increase is actually from 24.6% to 41.5%. That's a phenomenal increase. Even in urban, it has increased from about 20.54% to 25.4%. That's a 5% increase, which itself is very large, but it doesn't look as large because of the humongous increase in the rural labor force participation rate. And by the way, those critics who might say, "Oh, it's because of measurement problems, etc." No, that is not the case. The PLFS data actually complies with the ILO guidelines on measuring labor force participation. So these statistics cannot be dismissed by aspects like poking holes like that. I think that's something which we must recognize. Now, your question was, what is it that has actually led to this increase? I think this is where, see, what has happened in the last 8 to 10 years. There's been so many. Take for instance, the LPG connections, right? Earlier women would have been cooking, using maybe wood, and other, which actually not only was it a health hazard, but it was also inefficient. It took much longer. I can tell you, actually, I can say this from experience, because when I was young, when I was about 8 years old, 8 to 10 years old, I've seen my mom actually cook with charcoal, right? And then once I was about maybe in class 8 or 9, we basically we got a gas connection, and so I have seen the amount of time that it took really drastically reduced for my mother. Not only this, then earlier the emphasis on drinking water, the nal se jal, right? In many rural areas, women have to walk huge distances to actually get water. So by getting water in taps, in their homes, that is something that has freed up their time. What else has happened? Actually, the sanitation. I think the when you look at the toilets that have been built, of course, look at the huge impact on women's dignity. They don't need to, and there are Bollywood movies that actually have shown this. They would have had to get up before daybreak, to be able to go to ease themselves in the fields. They don't have to do that. So now they don't need to get up before daybreak. They actually can get good rest, and then wake up, so they are, energy, and they can be energetic. As a result, all these together have freed up women's time significantly, because they access to basic amenities such as pipe drinking water, clean cooking fuel, sanitation. All that has really helped. Add to that Ayushman Bharat. Oftentimes when somebody in the family falls sick, right? Not only do women are the ones that take the bulk of the load in taking care, but they also, many times, especially in poorest sections of our society, they also have to think about how to go and basically arrange for money for care, etc. And Ayushman Bharat actually takes care of some of those worries, at least. So together, all these have actually benefited our women significantly by freeing up their time, which they are now bringing in, using to basically participate in the labor force. So I think that is something. Again, I just want to use this as, this is just basic economics, right? Where if and the policies that have been implemented are consistent with good economics, and thankfully it is also good politics, and therefore we're seeing these positive effects.
Oh, thank you so much, Professor. Again, I just want to acknowledge the presence, and thank you so much, Deepak ji, for joining us. And it'd be great to hear your reactions and comments, especially from a market perspective. And whenever you're comfortable, feel free to jump in and have the discussion with the professor. So again, welcome to you. We also have Babuji from Canada. So let me go back to Sandeep, was one of the first people who joined the space today. So let me go back to Sandeep, to you for the question, and then to Korang.
Thank you, Ravi, for this excellent space. Thank you, Professor, for joining us. It's an honor to speak to you. I have a question regarding the future growth. Um, if you look at all the predictions, all the analysis, there seems to be a consensus that India will be a $30 trillion dollar economy by 2050. I mean, these predictions vary, but pretty much everybody is saying the same thing. So, if for that to happen, India needs to grow at double-digit rate for next 25 years. Um, if you look at the history and other economies, this has never happened, perhaps except perhaps for China. And China is a completely different system, and also there's a suspect about the data, and nobody trusts the data completely. All need to take the data with a pinch of salt. Given this scenario, how realistic it is to expect India to go at the pace of double digits for the next 25 years? And for this to happen, a lot of things has to go right. The second part of my question is, I mean, are there some things that may go wrong, like some black swan event types? And if yes, what should we be careful of during this next 25 years? Thank you, sir.
Yeah, I think that's an excellent question. So let me first start out by talking about the second part of your question. Yes, there are risk factors to what I'm going to talk about now. So I want to first talk about the risk factors and then give you my assessment for. Yes, I think the climate change is I think definitely a risk factor. Some of the movement against globalization and trade, especially in advanced economies, I think that is a potential risk factor. Also, sort of in some sense, a joker in the pack is WHO, for instance, seems to say yes. WHO hasn't been great in its predictions, but it said that pandemics may be because of some of the ramifications of climate change, that pandemics may be more frequent and possibly more deadly. This is what I know they seem to suggest. I'm not an expert to be able to know whether they're right or wrong, but I mean, if they're saying it, one has to acknowledge that as a potential risk factor. So I think these are some of the external risk factors. I think internal risk factors, of course, is is having a government that can continue implementing good economic policies. I think is definitely an important risk factor. So these are some of the global economy. Whether it basically will be able to grow strongly, because I think it's a no-brainer that a rising tide lifts all boats. So these are some of the risk factors. Now, with those caveats, stemming from the risk factors in mind, let me now share my prediction. I'm going to do sort of some numbers, some arithmetic in my as I speak, and I request all of you to keep track of these numbers, so that I can sort of lead you to the prediction that I have for what the country can be in 2047. So before I do that, I'm sure all our listeners are familiar with the rule of 70. That this is just basically something that is used as a sort of very good approximation for the time it takes for doubling. And those of us, if you remember from our high school chemistry days, half life as well, it uses same rule of 70. So the rule is basically, so if, for instance, we grow at 10%, and 10% in rupee terms, right? In rupee, in other nominal terms, then the GDP will double in 7 years. 70 divided by 10, 7 years. If we grow at 14%, in contrast, 70 divided by 14 is 5 years. So we will double, our GDP in 5 years. So that's the rule of 70 that I will be using for compounding. Now let's look at these predictions of ENY, for instance, predicts that India will be about a $25 trillion economy in 2047. And let me just parse out what is sort of the, the what is involved in that prediction. So let's take, real growth. And by the way, when you talked about double digit growth, that is double digit growth not in real terms but in nominal terms, as will become clear when I go through this set of calculations. So let's say, we take real growth to be 7%, inflation to be 5%. Okay, so 7 plus 5, that's 12. And historically, the depreciation of the depreciation of the economy has been, about sorry, this depreciation of the rupee dollar has been about 4.5%. So let me, take the level of depreciation to be about 4%. Okay, so if we take 4.5%, that leaves a 7 plus 5 is 12. And if I subtract 4% from it, that makes it basically 11 minus 7 plus 5, 12. 12 minus 4 is 8. So using the rule of 70 in about let me just revise the numbers a little bit. So let me make the depreciation to be to be 3%. If we take that as 3%, so 12 minus 3 is 9. And by the rule of 79, in about 8 years, the GDP will double. So in case there was, I sort of created some confusion changing the number. Let me repeat this once again. 7% real growth, 5% inflation. That makes the nominal rate of growth to be 12%. And let's take that the depreciation of the rupee will be 3%. In other words, in dollar terms, the growth will be 12 minus 3, which is 9%. Using the rule of 70, 9 8 is 72. So in about 8 years, the GDP will double. So starting from, if we take FY23, it's 24 years to 2047. So 24 years divided by 8 years, which is the period required for doubling, is basically 3. So there'll be 3 doublings, right? And approximately take the GDP in FY23 to be 3.5 trillion. So from there, let's do 3 doublings. So 3.5 to 7, 7 to 14, 14 to 28. So that's about, about the number that we have. Of course, I'm working with sort of round numbers here, and that's why you understand the prediction that E and Y has made. So hopefully this makes it clear that we don't need double-digit growth in real terms. We need double-digit growth in nominal terms, and which can be achieved through 7% real growth and 5% inflation. Just want to check if this was clear. Can you confirm whether this was clear? Otherwise, I'll repeat it.
So it was very clear. Excellent, Professor. I mean,
Okay. Yeah, let me now continue. And actually, so if this calculation was clear, now let me give my assessment why I think that this 25 trillion dollar estimate for 2047 is not so correct. I'll explain this later. But my prediction is that because of the inflation targeting regime that has been implemented, India's inflation, as I said, will be about 5%. Historically, our inflation has been 7%. So the difference in inflation between India and the US will be about 2%, at least 2% less, right? And when we look at the depreciation of the currency, nominal depreciation is basically real appreciation or depreciation, which itself depends on the growth in per capita GDP, growth rate of per capita GDP, and the difference in inflation. So while historically the depreciation of the rupee dollar has been 3.5%, it will be less than that now, about 1%, because of the lower inflation and also higher per capita growth, which I'll come to later. So now let me give you, if we can grow at 8% in real terms, not 7%, but 8% in real terms, 5% inflation, so 8 plus 5 is 13. 13 minus 1% as the rate of depreciation. I'll come and I'll give you that explanation why 1%, in a couple of minutes. But let's just go with these numbers. So 8% real terms, 5% inflation, 8 plus 5 is 13, 1% depreciation of the rupee dollar, 13 minus 1 is 12. Again, the rule of 70. So if you basically grow at 12%, you are doubling your GDP in 6 years, slightly less than 6 years, let's round it off to 6 years, which means over a 24-year period now, you will have four doublings, not three doublings, right? So four doublings means from three and a half to seven, 7 to 14, 14 to 28, 28 to 56. So if India can grow at 8% and the second part, which is depreciation in the currency, will be 1%. I'll explain, give you the economic logic for that just in a minute. But if this happens, India can actually be a $55 trillion. And that's the prediction that I have in my forthcoming book, that India can be a $55 trillion economy in 2047. Now, many will basically like my V-shaped recovery, and others is, what is this guy smoking? I want to know what has he smoked in the morning, blah, blah. But I'm giving you the economic logic for it. Much like my V-shaped recovery prediction as well, this is based on a careful look at the data and good conceptual understanding of the drivers. So when we look at inflation, why, when we look at the rupee depreciation, why do I say that the depreciation will only be about 1% and not the 3.5% that has been in the past? One part, as I said, is a lower inflation. And conceptually, as I said this, let me repeat it, which is nominal depreciation of the currency is real depreciation plus the inflation differential. Historically, India had about 7% plus inflation, US had 2% inflation. So the difference in inflation was 5%. Even though nominally we were growing at about 1.5% greater, in terms of per capita GDP, we basically, that 1.5% appreciation was being drowned by the 5% difference in inflation, and therefore we were getting a depreciation about 3.5 to 4% historically. If you look at the data from 1990 onwards, the rupee has depreciated about 3.5 odd percent every year. If inflation is going to be 5%, and that itself, in my opinion, is a conservative estimate. Why? Because now inflation targeting framework requires inflation in India to be 4% plus minus 2. In other words, has to be between 2% to 6%. So the median of that is 4%. So a realistic, assessment should be, let's say it should be 4%, but let's be conservative and say 5%. That means compared to the historical inflation of 7%, we'll have about 2% less inflation, which should mean 2% less depreciation of the currency, because, as I said, nominal depreciation is real appreciation or depreciation plus the inflation differential. In other words, even if, let's say, the real appreciation remains just the same as it has been in the past, just the 2% lower inflation will mean that the rupee depreciation would be about close to 1.5 odd percent, not the 3.5%. That's where you can see the math that ENY's prediction has seems to be wrong, because they're not taking into account the impact of the change in inflation regime on the rupee dollar depreciation, while my assessment, my prediction is taking that into account. Now let me share on what is happening on the real side as well. And this is, I've looked at the data. When you look at the productivity data, this economists use what is called the Penn World tables. World Bank, IMF, everybody uses these Penn World tables. If you look at the change in productivity, and I'm going to give you the actual numbers, the increase in the productivity, the rate of growth of productivity from 2002 to 2013 has been 1.3%. So 1.3% from 2002 to 2013. From 2014 onwards, till we have the latest data, that rate of growth has been 2.7%. So let this sink in, right? Which is 1.3% growth in CAGR, cumulative annual growth rate, growth in productivity from 2002 to 2013. From 2014 onwards, 2.7%. In other words, productivity growth has been more than double. Now, some people will say, oh, again, what is he smoking? Why hasn't it translated into higher growth? It hasn't translated into higher growth because growth is not just a function of productivity, but growth in productivity, but also because of growth in investment. And because of the the financial sector problems that we had, the crony lending, the overhang of all of that, investment has not grown as much, and that is why we've not had as much growth in the last 10 years as we could have if we did not have that problem. But going forward, as I just mentioned earlier in one of the answers to the government is taking the lead in investment, and private investment is starting to come through. And I think post elections, when the uncertainty goes through, reduces, investment will pick up. So along with the productivity improvement, investment pickup will also is likely to deliver higher growth. So while India has never grown at 8% consistently, our best performance has been 7% plus. If we can do the reforms that, double down on reforms, the ones that we've spoken about, with the productivity differences, we can get 8% growth. That will mean higher, real appreciation as well. So overall, that 1% depreciation in currency that I mentioned can actually manifest, which is why my prediction, this is something which will, I think people will sort of see, some people will at least see it with incredulity. Early contrarian productions, early contrarian predictions always evoke incredulity. The V-shaped recovery prediction, when everybody was predicting doomsday for the Indian economy, did evoke that. So I've lived through it, and therefore I can anticipate. My sense is we can be a $50 trillion economy plus, in 2047. So the ENY and the Goldman Sachs predictions actually are not completely, they're not portraying the full picture, or they've not understood the full picture.
Thank you, Professor. Excellent
Thank you.
explanation with the math. Have you published any papers on this one? I mean, it would be a tremendous knowledge base for us to refer to.
This is basically part of the book that, the India and at 100 book. It'll be part of
And
that.
we
Looking
will,
It
forward
should
to
be
it.
coming
Thank you
out.
so much.
and we'll have time today to really talk about the book as well. But this is fantastic, and it's been amazing, Professor Krishnamurthy, because when we started, we did not have any math. We did have these predictions by Honorable Minister Piyush ji. We had Ambani ji talking about it, and Adani ji, and many other people, right? And then we got these Western analysis. Just being extremely grateful, because most of our spaces, people have said, "Where is this math? Bring it to us." And I've made sure that this is going to be publicized far and wide, and it'll be hopefully captured extensively in your book too, which we are so excited that it's coming. I was telling him the other day when I was speaking to him that we didn't have that evidence, and I said, you have no idea, the minute the book comes, you have no idea what we'll do to it. But thank you so much. So let me
So
so
Ravi, just I would wait for, let's wait for the book to share this, right? Because the
yes.
question came, I shared this, but I think it'll be better if people can read, because there'll be a lot of details as well in the book on
Yeah,
this.
and also, just to let to all the listeners and others, we will most likely, yeah, since we're talking about the book, we will do a detailed follow-up space with some interesting folks, as Professor, when he launches the book, and he'll talk more about it. So let me open up the space to Karang, who's been also sharing some interesting data. Aditya, I don't know if Aditya has some issue with his Twitter connection, and I will go back to my WhatsApp and see the questions he has. It's been a little crazy with X these days. But Deepak ji, do you want to just come in on that if you have time? I know that you also, Kaurav, again, welcome, Purnima ji. It'll be great to hear you also, raise some perspective from your side. So, Kurang, over to you while the other speakers think of a question.
Okay. Wow. Thank you for your time, first of all. I've followed your work for a while. I've got a family member that has served on the Economic Council of India as well years ago. So you've done a fantastic job along with the other ministers. Your FDI comments, I'm going to start way from the beginning because you touched on so many good points. When it came to the US and its revival after World War II, like you were stating, they focused on infrastructure. I believe you guys have definitely done that already. Especially when it came to the highway system, as India is currently doing and has been doing right over the past decade and is continuing on. Right, the cost of that will double more than likely. Right, spent roughly about 7 trillion there. When it comes to ports, when it comes to airports, right, logistics, as you touched on, was a heavy component. When it does come to what's going on, when it comes to the current budget right now, and correct me if I'm wrong, please, on these numbers, okay? And we did grow 8% and 8.26%, 2015 to 2016, not to correct you, but like you mentioned, sometimes calculations due to different systems and different methodologies can be different. So basically, the projection for this year is around 7.3%, right, for GDP. As you mentioned, the per capita GDP significantly improved. Somebody was nice enough to share, right? It's roughly about 2.8 or about 2,800 US dollars. Capital expenditure outlays, right, for this year, they're going to increase roughly about by about 11.1%. So if you take a look at fiscal deficit wise for 2024 2025, that's about 5.1% of GDP. FDIs, as you talked about, I shared a graphic up top, Professor. They've increased significantly, right? 2014 to 2023 was roughly about 596 billion US dollars. That's twice the inflow from 2005 to 2014. Since you're speaking of the requirements of investments, when it comes to lending, as you know, that's also improved, right? Would you also say the schemes that you were mentioning pertaining to water infrastructure, even when it comes to the bottom up approach of electrification, especially in the rural areas, that's significantly improved? So the new schemes, I think, from what I've been reading, and just your opinions on these, right? Basically, the garib, the poor class, women, right? The yuva, the youth, as well as the farmer. That's the highest priorities right now in the budget going forward, right? You also have a 5-year interest-free loan for the youth. Would you say also when it comes to defense as well, that that's been a heavy component when it comes to opening that up more for joint ventures, right? When it comes to the honorable prime minister and the schemes, what would you say that that also needs to continue there? Logistics, as you mentioned, okay, is that also a great continuation? I didn't even mention railways, as you know, that's a huge component as well, just not highways. But would you say there's other things when it comes to international partnerships, just not with the United States as well? Obviously, the European Union, you've seen the agreements that have been signed by various countries as of late. You mentioned some Southeast Asian components. Obviously, you know, Japan had heavily invested, right, in India. But what if you had to pick 3 priorities, okay, or even let's say any more, due to what is currently being proposed? What would they be, if you don't mind me asking?
Uh, yeah, firstly, I think a lot of what you've already shared, those are all wonderful perspectives. So if you ask me 3 things that that India needs to focus on, I would say that the policies for job creation, and that's where manufacturing is really important. Many reforms that have been started, those need to be pushed through completely. So land, labor, power sector reforms, I think, and at the same time some of the banking sector, enabling the banks, the Exim Bank of India. These are all these will actually really help. Even some of addressing some of the policies that lead to dwarfism among Indian firms. I think these I would put in the first bucket in some sense of reforms that need to be focused on. The second set is ease of doing business. Enhancing ease of doing business, and I think here the tax aspect actually needs to be really taxation for. So there was a committee that was, I, as a chief economic advisor, I was part of a committee that looked at the tax code. The tax code we have is more than 6 decades old. It's a 1961 Income Tax Act, where there's been a lot of amendments after that, and sort of lots of patchwork, therefore, which has generated internal contradictions. And much like the GST was implemented. And do keep in mind, actually, GST, and this is something which I, as a side comment, I want to mention, that when big reform is done, you don't land into perfection immediately. You craft into perfection. In other words, or said differently, if we keep insisting that it has to be perfect, then perfect becomes enemy of the excellent. And I think and it's very difficult. So even on taxation, on the direct tax part, I think there'll be some sort of crafting into perfection that will have to be done. But I think it is important to have a new tax code. And this committee had gone in and looked at, and actually had written a new tax code itself needs to be implemented, because a lot of the measures that have been implemented so far, on, for instance, the faceless assessment, etc., that has been done, the power of that will multiply, manifold, if the tax code itself is actually is rewritten. It will mean work, because the new tax code will have to then also map out previous sort of or previous uh, laws, or or sort of jurisprudence that has been arrived at. It will require work, but I think, as I said before, you don't land into perfection, you craft into perfection. So the excellent basically should be pursued, and thereby allow the opportunity for the excellent to then slowly become perfect. So that's the second, ease of doing business, within which tax itself is really quite important. And I think the third part is, overall, the emphasis on infrastructure, and in general capital creation, and capital, not just physical capital, which is infrastructure, but also human capital, and here healthcare and education and the digital infrastructure, which is actually very good work has been done, that needs to be continued. So that's the third part that I would actually mention as priority. So in other words, the first, as I said, jobs, and therefore manufacturing, all the reforms, that needs to be done. That's the first bucket. Second bucket is ease of doing business, within which tax itself and direct tax itself is really important, and some cleaning up of the GST is also something that can be done. And the third that I mentioned on overall, what I think the third I mentioned was,
Digital,
forgetting what I
digital.
mentioned. Yeah, digital, correct,
Yeah.
correct. The digital, that's something. So these are three buckets, three priorities that need to be, emphasized. Yeah. So the third was broadly capital, actually. So physical capital, human capital, so healthcare, education, and digital capital as well. All three need to be focused on. So those are my three priorities.
Thank you so much, Professor Krishnamurthy. Let me give the floor to Deepak ji, who's been listening for quite some time, really from the market perspective. And if you can really, Deepak ji, really bring in your points of how you also see this as we move forward. Over to you.
Thank you so much, Ravi, and was a quite an honor listening to Professor Krishnamurthy. I think I agree with his assessment that we will reach $50 trillion, but I think we'll get there a different way. In that the dollar and rupee equation will actually see a lot lower depreciation. We will actually, I believe, see much lower nominal growth, because we will be able to control inflation a lot more as time goes by. It's 25 years from now, so I believe as we productize and as we mature as an economy, our inflation levels will be more towards the 2 and 3% rather than the 5 and 6% that we're used to. So I think we'll get there, but we probably won't get there at the depreciated dollar. And in all probability, the rupee at that time will also be a relatively stronger currency to deal with worldwide, because of the BRIC economies or the emerging economies are one of the few relatively large net importers as we are right now. And if we were to not solve the export part of the situation as much as we were to manufacture for the domestic economy itself, I think that itself will substitute a lot of the imports, will change a lot of the way brands are built or used in India. I think that way it's a pretty good thing. But what I found fascinating also was the fact that we don't build scale economies, because we regulate at scale and leave the unorganized relatively under allocated. It happens in the markets as well. A lot India's largest institutions are collectively own as much as all retail investors put together in the market. So that means if you add up all the mutual funds, they have about 9% of total market cap. If you add the retail individuals, non-promoters in the economy, they also own about 9%. And foreign investors own about 18%, I think, and the rest of it is between promoters and a few other institutions. But I think this is also because at scale we regulate, so an individual can do a lot more with their capital that institutions cannot do. We don't have proper hedge funds that that take leverage, or that are able to attract, say, pension fund capital, retirement capital, and all that stuff, that is restricted from going into equities. And similar to perhaps what Professor Krishnamurthy talked about, as in the factories, if you go to 95 people, you just start another unit rather than go to 200 or 300. So this is a question I want to ask Professor: is do you think this will change in the capital allocation, the capital market part of the world as well? Because I think we haven't built institutions, financial institutions of massive scale yet, compared to our GDP size. Also, would but we are one of the few car manufacturers in the world. As an economy, I think China, and then not many other countries, not Indonesia, not Malaysia, or any of these other countries, don't make their own cars. To a large extent, we have our cars. So, would this also translate into the financial markets and financial institutions as well?
Yeah, so I think very good question. I'll come to the question, but just I want to add to the observation that you had. Even if, let's say, and I think that possibility that you articulated is something that cannot be ignored. For instance, if, let's say, we have only 3% inflation, um, as I was saying, compared to sort of 5% inflation, that means that the inflation differential in itself reduces another 2%. Instead of maybe a 1% depreciation on average in the currency, we might have 1% appreciation, in the currency. So nominal growth will be, will be lower, but the rupee dollar itself, will also be lower. In that scenario. So I think, yeah, and this is the part that I like thinking, about the elephant rather than just the trunk of the elephant, or the tail of the elephant. Looking at just inflation, but not looking at the impact of that on the rupee dollar. You did not do that, but other sort of some other commentators oftentimes look at that in a partial way. But I think it is important to understand this interaction. So it's quite possible that with a lower inflation, we may actually still get there, but with a lower nominal GDP in rupee terms, but about possibly the same nominal GDP in dollar terms. That can certainly happen, I think. But I do want to actually point out, for the benefit of our listeners, that it's important to look at these from a holistic perspective. That the impact of real growth on the rupee dollar, difference in inflation itself on the real dollar, on the rupee dollar, and on the nominal GDP in rupee terms, etc. So I think it has to be looked at in a holistic sense. Now, I think on the comment about the scale of the financial institutions, I think that's a very good point. I would urge you, sir, to actually take a look at, in the 2019-20 economic survey, we had a chapter on the golden jubilee of bank nationalization. If you go and Google that, you'll find this was in volume 1, where we showed, through different metrics, that even though we are the fifth largest economy, and these numbers might have changed a little bit, but if you look at, as of then, about 2020, the largest bank that we have, Indian Bank, among the top 100, we have only one bank, that's State Bank of India, and that too, it was ranked 55th. While in economic size, actually, when you start ranking economies on their GDP, we are the fifth largest. So at the very least, we should have at least one bank in the top 10, if not top 5, but we don't. And even countries that are actually a fraction of our size have bigger banks and financial institutions. I think that is very important. We do need economies of scale to be reaped by our by our banks and financial institutions. And one of the aspects that actually we need to think about here is from a regulation perspective. And I want to actually make a distinction between regulation and supervision. And the reason I'm talking about here in general about capital markets, financial sector itself, but in the context of banks itself. The difference, regulation, for instance, if I, let's say, mandate 1% additional capital for for banks above and beyond what Basel recommends. For instance, Basel, the BCB, as a Basel Committee on Banking Supervision, recommends about 7.5, 8%, let's say, on as the minimum capital for banks. And if we require 1% higher capital, then that there is a cost to that. Yes, of course we do, that provides higher cushion. But 1%, if that 1% capital is released, think about the amount of lending that can happen, actually higher lending that can happen. So some of the inadequacies on supervision, which now are being slowly fixed, these inadequacies really came into spotlight during the banking sector crisis that we had. For instance, you'll remember, we had this phenomenon of restructured assets, which was nothing but non-performing assets, and yet they could provision at a much lower level. And that was just an invitation for evergreening of loans and continuing to pretend as if there were no non-performing assets, etc. So the NPA problem was allowed to fester for a very long while, and that was actually those were manifestations of supervision, banking supervision. But we basically, because of some of these inadequacies on banking supervision, we cover for those by requiring additional capital using banking regulation. So I think as we move forward, we need to actually bring our regulation, things like capital, to in sync with with global norms, but enhance supervision, the quality of supervision significantly. At the same time, I also our banks as well, and I think if we look at the last 60, 70 years, right, the one move that has, and for which our banks definitely deserve credit, which basically is something that globally acknowledged, is the Jan Dhan Yojana, where we've created almost 500 million bank accounts. So that's something. But if we basically sort of ask for a second big achievement at global scale, we would struggle to find another one. And I earlier, in one of the responses to one of the earlier questions, I basically compared India versus South Korea and how they've actually grown their credit. So our banks need to really be, aspirational. They need to be thinking like a Mahendra Singh Dhoni, or a Saurav Ganguly or a Virat Kohli. There was a time, in the 1990s, when a Mohammad Azharuddin was happy just winning at home, and as soon as we stepped aside, beyond the shows, we went to an Australia, South Africa, they went into the mindset that we cannot compete. But cricket moved on, and actually people like Saurav Ganguly, Mahendra Singh Dhoni, and Virat Kohli, and now Rohit Sharma, said that even when we go into these countries, we want to beat them in their at their game there itself. I think our banks also need to have the same mindset. It is not enough for them to say, oh, we are basically big tigers at home. They need to be start competing globally. I think that mindset is very important. And this is basically a clarion call to the boards and the chairman and managing directors of our banks, private sector and public sector banks, to not just benchmark themselves with the Indian peers, but benchmark themselves vis-a-vis global peers. I think that is really important. That mindset is important. And in this, I will mention actually, the use of technology. Even when you look at some of our private sector banks, and this is an area that I actually can keep speaking, because banking, I've done, that's been one very important area of research for me, a focus. I mean, before my PhD, I worked with ICICI as well for a couple of years. This was when ICICI was a financial institution. So if you look at many banks, the way they use technology, not just for retail lending, but even for corporate lending and large ticket loans, etc., our banks have not done that. They basically, even if you look at our private sector banks, some of the best private sector banks, they've used data analytics, technology, etc., for retail lending. But what about corporate lending? And I think we cannot have this phenomenon of, actually, historically, if you look at our banks, are basically, it's just the accelerator brake phenomenon, where we actually grow credit, When things are good, we grow at breakneck speed, and then we have to pause, put the brake, and the lending becomes a trickle. We cannot have that. We actually have to have banks that can grow credit in a sustained manner, not lend to cronies, the Vijay Mallyas or others, examples like those, but lend to really good corporates, good, and make, do good lending, thereby grow credit. So I think this is really important. I'm so glad you've asked this question, because our banks, both the regulation side, but also the management and the boards need to have a mindset that if the Indian economy is aspiring to compete with the best, then our financial sector also needs to compete with the best in the globe. It is not good enough to actually have an Muhammad Azharuddin mindset. We need a Mahendra Singh Dhoni, we need a Saurav Ganguly, we need a Virat Kohli, we need a Rohit Sharma mindset in the financial sector. And they can pick up, for example, maybe our pharmaceutical, our IT, etc. When they can compete, with the rest of the world, why can't our financial institutions also compete? And also, this is a related, when we have all these awards that are given, banking sector awards, etc. So this is a call to the media folks. When they give awards, they need to be awarding, banks and financial institutions that actually enhance global presence, not just those that are tigers at home.
Thanks so much. That's actually spot on. I think to much as you said, there's also the fact that regulators keep not just the capital ratios relatively high, they also dictate the way banks can lend 40% to this and 30% to that, and you can't do more than X amount. And today I was kind of surprised to even find out that banks have certain capital market limits that disallow them from taking equity when they have to write off a loan. So they write off a loan, and don't take any equity in return. Therefore, do not benefit from the fact that the company actually becomes healthier. And if they had taken, which they can in an insolvency and bankruptcy kind of a code situation, they could actually benefit from the recovery of the company and therefore recover some of the haircut that they took on their loans. But we can't, because regulatory rules restrict them from doing something like this. So yeah, I think you're right. We should also evolve regulation. Thanks so much.
No, but let me let me comment. I think it is important. I spoke about regulation, but I presume you're a financial market participant. I would humbly request you to to not just. I also spoke about the mindset within leaders in financial sector. I think equally that needs to be acknowledged in general, and this is something which every stakeholder needs to stop basically looking at, oh, what the others, which is, for instance, the regulator says, oh, regulator needs to improve. First look at yourself. First show the mirror to yourself. So I think I would urge you to actually, when you talk to financial sector participants, the boards, the management, the regulators, basically what they need to do, they should do. But first look at yourself, the mirror. Has any regulator stopped the financial sector, the boards and the management from implementing technology? No. But how much artificial intelligence, machine learning, these are stuff that, how many of them do that actually? How many engineer MBAs do we have on the boards who actually understand technology and business? We have, I have nothing against any section, but we need people who understand the power of technology, power of analytics, power of data on the boards, and really, so show the mirror. I think that is something which is very important. This tendency to actually only focus on improvements that need to be had on outside. I think it's important to focus inside. That's the way improvement happens.
This is amazing. What a fantastic conversation we've been going on. By the way, for everybody to know, we've been over 2 hours. Just want to acknowledge and thank you so much, Professor, because it takes a lot of stamina to speak, but we can keep on, and I think we have some amazing.
No, but Deepak, sorry,
Ravi.
Ravi, I actually want Deepak to acknowledge this. I'm sorry to put him on the
Yeah.
spot. I think he needs to say, so that everybody hears. When I responded to his question, he took the part that I focus on regulators, but did not say anything on the change that needs to happen in the financial sector. I think from one among themselves, they need to hear that the focus, showing the mirror is extremely important.
No, no, I agree with you. I'm an engineer, MBA sort of person myself, and we're doing all of the things that you're talking about. But does not. I mean, I was also talking about the banking sector itself, the financial sector. So, for instance, if I'm telling you that the regulator has rules that prevent this from doing so, it isn't the regulation that's preventing these banks from taking the equity positions. It's the fact that they're not doing it. They should be doing it. They should be asking
Yeah,
for it, right? And the
yeah,
regulator will say, why not?
yeah,
It's not. I today, in fact, my problem was with the banks, not with the
yeah.
regulator.
Okay, good.
Why
Good to
are
know.
banks writing off loans and not asking for equity? That sounds
Good.
completely retrograde to me.
Yeah, good to know.
And when we keep talking about bond market regulation and all that stuff, but the bond market does not develop because the players don't develop in it. It's not
Right.
because the regulations aren't there. And
Yeah.
I agree with you on that completely. I was just bringing a regulatory point of view of saying we need to. I think I agree with you on the regulatory ease of this thing, but on the rest, I'm completely with you. We need to evolve. We can't keep blaming lack of capital. We have always succeeded as a country with constraints. We will
Yes.
continue to succeed with constraints.
Yes, yes, and in the real world, there'll always be constraints, and I think those that are, basically those that are passionate to grow, to basically show themselves the mirror and grow despite the constraints. So thanks a lot. I appreciate that. I appreciate that very much, Deepak.
Uh,
Yes, thanks so
What
much.
a
Thanks so much.
fantastic! I can just like this can go on for next 3 4 hours, but just I just want to go back to a comment that you made, which was about youth dividend, right? And then we have Praful here, who's one of this young generations, right, of entrepreneurs who are really trying to, coming from very modest background, really trying to pull things together. And Praful's story, I'm sure Praful, if you have time, you can speak. But it'll be interesting to see, the whole emphasis that you gave, which is so critical. And I think many studies, EY and everybody else has talked about the youth dividend. And I always say that youth dividend can be a double-edged sword, because if we are not going to skill and provide this opportunity to young people to really be part of this 2047 journey, definitely people like me, I mean, I don't know, I mean, I see myself old, we will not be the ones who will really take that 25 years piece. So I don't know, Praful, are you there? If you are able to ask that question really from the young people, young entrepreneurs, taking on this very important moment, and how do we create those thousands of, young entrepreneurs like that, Praful?
Yeah, thank you very much, Ravi ji, for hosting this, and I'm listening all Deepak ji and Vinay ji and all, and it has been a good session so far. So if you emphasis a lot on youth, if you talk about any country, किसी भी phase में कभी भी वो grow अगर करिए तो youth का contribution obviously आगे ही रहता है. And the way India is going through and the way India is emerging as a country, just because of youth population's involvement in the economy. So I was just yesterday talking about the one of the government issues they were talking about कि women empowerment हमें करना है. तो I just changed it to कि women empowerment की बजाय अगर women involvement हमारा हो गया, जैसे youth involvement होता है, तो कहीं ना कहीं चीज़ों का phase और चीज़ों का result बदलेगा. एंड सेकंड, जैसे दीपक जी और बाकी लोगों ने बात करी, ये टॉप नॉच लेवल 1% 2% की बात करी जो डायरेक्टली इकोनॉमी में इन्वॉल्व होते हैं और जो एंगेजमेंट लेके आते हैं. बट आई विल टॉक अबाउट द रूरल इंडिया एंड आई विल टॉक अबाउट द मिडिल क्लास लाइन वाला यूथ जो है या जो गाँव में है या जो ग्रोइंग इकोनॉमी में अपना पार्टिसिपेशन करना चाहता है, कहीं स्ट्रगल कर रहा है. तो एक पिछले 4-5 सालों से 8 सालों से एक आइस ब्रेकिंग लोगों को मिली, खासकर यूथ को. और यूथ, व्हेन आई टॉक अबाउट यूथ, इट डजंट मीन एंड इट डज नॉट लिमिट टू मेल यूथ. अभी अगर इकोनॉमी की, हम इंडियन इकोनॉमी की बात करें तो डायरेक्टली विमेन का कंट्रीब्यूशन है देश की इकोनॉमी में, वो कहीं 11-12% पे के आसपास ही आता है. अगर आप 2047 में 45 ट्रिलियन की या 40 ट्रिलियन की बात करते हैं इकोनॉमी की, तो जब तक यूथ फीमेल यानी कि किशोर युवतियों का जब तक योगदान इस देश की इकोनॉमी में नहीं होगा बढ़ चढ़ के, तो वो पॉसिबल नहीं लगता, क्योंकि वही 48-50% 52% का टोटल पॉपुलेशन का उनका जेंडर का है कंट्रीब्यूशन. And second thing which I love the most nowadays is like youth especially are taking risk. They're getting out of their comfort zone. They're getting out of their rural area. They're getting out. They're investing a lot on raising money. Collaboration is happening over competition. People are गोइंग फ्रॉम देमसेल्फ कि भाई अप्रोच करते हैं, मीटिंग करते हैं, चीज़ों में हाथ पैर मारते हैं, फेलियर होगा। और ये 5 से 10 साल का एक ऐसा अभी सेगमेंट मुझे देखने को मिलेगा, हम सबको देखने को मिलेगा, जहाँ पे नुकसान होंगे, कुछ स्टार्टअप का बबल फूटेगा, वैल्यूएशन की कुछ चीज़ें होगी, ये सब होता है जब आप फेस होते हो, जब नई कोई परिभाषा या कोई नई गिमिक के थ्रू आप जब जाते हो, तो बहुत सारे प्लस ही आपको दिखते हैं, जो हमने भी लर्निंग ली एज ए कंपनी की भाई स्टार्टअप होता है, फंडिंग होती है, ग्रो करोगे, वैल्यूएशन होगा, तो ये कहीं ना कहीं थोड़ी से के बबल को थोड़ा बहुत आँच मिली है, तो फिर एक लर्निंग सबके लिए हो जाती है। तीसरा बड़ा इंपॉर्टेंट फैक्टर मुझे ऐसा लगता है कि एक साथ व्यक्ति ना 3-3, 4-4, 5-5 चीज़ों पे काम करने लगा है, जो पहले नहीं होता था। बड़ा फोकस होता था, एक ही चीज़ को करेगा, टाइम मैनेजमेंट का प्रॉब्लम होता था। और फिर जैसे टेक्नोलॉजी की बात करी प्रोफेसर ने कि क्या इन्वॉल्वमेंट है, एआई का क्या इन्वॉल्वमेंट है, तो एआई तक तो मैं नहीं जाऊंगा, बट स्टिल टेक्नोलॉजी से, सोशल मीडिया से, इंटरनेट से लोगों की इफिशियंसी बढ़ी है, लोगों का काम करने का तरीका बदला है, लोग फास्ट हो चुके हैं, एंड ग्लोबल विजन लोगों के पास होता है। जब मैं जोधपुर जाता हूँ, भिलवाड़ा जाता हूँ, जबलपुर जाता हूँ, या इंदौर की लोगों की यूथ की बात करता हूँ, तो उसके पास में अब जो पर्सपेक्टिव है कि भाई मेरे को इस कंट्री में, जैसे अगरबत्ती की अभी मैं बात कर रहा था, अगरबत्ती मैन्युफैक्चरिंग का बहुत अच्छा यूनिट लोग बच्चों ने डाला, एक 23-24 साल के लड़कों ने, तो बोले यार मेरे को तो अफ्रीकन कंट्रीज में एक्सपोर्ट करना है, चाइना में एक्सपोर्ट करना है, या ये साउथ ईस्ट एशियन कंट्रीज में हमें एक्सपोर्ट करना है। तो दे हैव दैट ग्लोबल विजन। एंड अंटिल अनलेस इफ यू टॉक अबाउट द 2047 विजन, अपार्ट फ्रॉम, जैसे एक पहले बोला कि महिलाओं का योगदान, सेकंड ग्लोबल विजन अगर आपके पास नहीं है कि ग्लोबली आप ट्रेड कर सकते हो, ग्लोबली एक्सपोर्ट कर सकते हो, ग्लोबल इन्वॉल्वमेंट एंड ग्लोबल इकोनॉमिक ट्रेडिंग अगर कॉमर्स नहीं हो सकता है, तो ये फिर विजन छोटा लगता है, और फिर वो विजन नहीं होता है, वो लिमिटेड टू नेशन हो जाता है। चौथी चीज मुझे ऐसा लगता है कि एक जो एज का फैक्टर है, जो मैं हमेशा बोलता हूँ कि 45, 48, 50 में जाके, जैसे मेरे पापा या कोई भी है, कि जो एज फैक्टर है ना, उनका ना थोड़ा स्लो डाउन हो जाता है कि वर्किंग क्लास में, कि मैं अब काम कम करूंगा, मैं रिटायरमेंट की तरफ जाऊंगा। तो इफ़ यू गो टू सिंगापुर, और अगर चाइना के साइड आप देखोगे, तो वो लोग 90 तक काम करते हैं, 85 तक काम करते हैं, 82 तक काम करते हैं। तो कुछ ये भी ऐसी अवेयरनेस कैंपेन हमें करना चाहिए कि उनके लिए कौन से बिजनेसेस हो सकते हैं, उनके लिए कौन सा ऐसा पार्ट टाइम या फुल टाइम जॉब हो सकता है, जहाँ पे उनका इंगेजमेंट, इन्वॉल्वमेंट बहुत ज़्यादा आ जाए। कि भाई अगर हो गए 45-50, तो आप ये मत सोचो कि मुझे खाट पे बैठना है, कि मुझे सिर्फ घूमना है, कि मुझे तीर्थ करने जाना है। सो एक ये अवेयरनेस और एक ये इनिशिएटिव हम लोगों को लेना पड़ेगा कि 140 करोड़ लोगों का इंगेजमेंट फ्रॉम ईच सेक्टर, फ्रॉम ईच जेंडर, फ्रॉम ऑलमोस्ट 360 डिग्री, हम लोग उनको कैसे इंगेज कर सकते हैं। और ये तभी अवेयरनेस मुझे जब लगेगी, जब हमारे गवर्नमेंट के साइड से बोलो, या हमारे स्टार्टअप स्टॉक्स बोलो, या कॉन्फ्रेंसेस बोलो, जहाँ पे हम लोग इन लोगों को सोशल वर्क की बजाय कोई इकोनॉमिक वर्क दे। इंडिया हैज बीन अ कंट्री विच इज लाइक सोशली हम लोग बहुत डेवलप रहे हैं, सोशल टॉक्स बहुत होती है, सोशल डेवलपमेंट की बात होती है, समाज के लिए क्या करोगे। बट व्हेन यू इकोनॉमिकली ग्रो, when you grow economically and financially, every other things हो जाता है उसका काम। इट डजंट उसमें ज्यादा फोकस है, बहुत ज्यादा आपको फोकस इम्पेसिस देने की जरूरत नहीं कि वो कैसे होगा।
प्रफुल्ल,
हाँ,
मैं तो सोच रहा हूँ कि मैं भी तीर्थ पे चला ही जाता हूँ आज के बाद।
नहीं, यू शुड नॉट गो, एंड यू शुड
नहीं
नॉट
नहीं
इवन।
नहीं नहीं, तो let me ask you to
एंड
pause, to let me hear from Professor to react to some of your very important points, Professor ji.
आई थिंक जो प्रफुल्ल ने कहा है उसमें एक्चुअली मुझे कोई उसमें डिसएग्रीमेंट तो है नहीं। जो वो कह रहे हैं वो एकदम सही है। युवतियों का योगदान ज़रूरी है। बस यही एक बार और दोहराना चाहूँगा कि हमारे जो युवा हैं वो सिर्फ रोज़गार के बारे में ना सोचें, और कंपनियां शुरू करने के लिए रिस्क टेकिंग, ये मैंने देखा है कि एक्चुअली, और इसमें ये तुम जो प्रफुल्ल कह रहे हैं उसमें मैं उसको और बढ़ावा ही दे रहा हूँ कि ये कि यदि हमारी जनरेशन आप लें, और इस हमारे जनरेशन को आप यदि हमसे जो पहले जनरेशन आई थी उससे कंपेयर करें, तो हम में जो है आत्मविश्वास और ज़्यादा था। कि हम भले ही किसी और देश के जिनसे नागरिक उनसे जब हम मिलते थे, तो हमें कभी ये नहीं लगा कि अरे भारतीय हैं तो हम किसी भी मामले में छोटे हैं या हमसे नहीं हो पाएगा, ऐसा कभी नहीं लगा। ये मैं देखता हूँ कि जो हमसे जो अभी छोटी उम्र के जो अगला जो जनरेशन आ रहा है, उसमें और भी बढ़ चढ़ के वो जो आत्मविश्वास है वो कूट कूट के भरा हुआ है। तो ये बहुत अच्छा है एक्चुअली, ऐसा ये। और ये क्योंकि कुछ हमारे इसमें भी एक जागरण हुआ है कि हम कैसे थे, और हमने क्या क्या योगदान दिया जो मानवता को, तो वो सब उसकी वो जो डिस्कवरी उसके कारण एक्चुअली काफ़ी एक अच्छा आत्मविश्वास आया। तो मैं मानता हूँ कि एक्चुअली युवा हमारे कंपनियां शुरू करें तो वो सबसे अच्छा योगदान है, क्योंकि यदि एक युवा अपना कंपनी शुरू करता है और 1000 लोगों को नौकरी देता है, तो एक परिवार में एक औसताना यदि 5-6 लोग ले लें, 4-5 लोग भी ले लें, तो एक युवा जब एक कंपनी बनाता है तो 4 से 5,000 लोगों का एक्चुअली करीब 1000 परिवार उसमें उससे उनको लाभ मिलता है। और मैं यदि उदाहरण लूं तो हमारे पापा चूंकि रेलवेज में नौकरी कर पाए, वो भले ही शुरू में उन्होंने क्लार्क की नौकरी में आए, लेकिन उसके कारण जो मैं और मेरे भाई को हमको जो शिक्षा दे पाए और हमारी परिवार की जो उन्नति हुई, वो साफ दर्शाता है कि एक अच्छी नौकरी, मतलब एक सुदृढ़ सी नौकरी जो है वो कितना योगदान देती है। तो जो नौकरी बनाते हैं वो देश के लिए सबसे ज्यादा, बाकी कुछ देश सेवा करने की जरूरत नहीं है। यदि आप अपने लिए अच्छा एक कंपनी बनाएं और उसमें रोजगार यदि लोगों को, हमारे युवाओं को, युवतियों को दें, तो वो सबसे अच्छा योगदान है। ये मैं इसमें जरूर दोहराना चाहता था। और इन जनरल यदि हमारे जो युवा हैं रिस्क लेना शुरू करें, एक और इस संदर्भ में एक और बात ये कहना चाहता हूँ कि कई युवा जो है वो सिर्फ सरकारी नौकरियों पे ध्यान देते हैं। तो इससे जो है कई बार क्या होता है कि आपको, मान लीजिए आपको कोई सरकारी नौकरी, अब 30 साल की उम्र तक आप उसके एग्जाम्स दे सकते हो, तो क्या करते हो आप, एक्चुअली उस एग्जाम की तैयारी करते हो, जनरल नॉलेज को आप रटते हो, और फिर जो कि ये जनरल नॉलेज रटना वगैरह प्राइवेट सेक्टर में या रोजगार में उतना काम नहीं आता। और क्योंकि ये एक्चुअली अब जब जब कोई भी अर्थव्यवस्था बढ़ती है तो उसमें जो प्राइवेट सेक्टर है उसमें नौकरियां ज्यादा बढ़ती हैं, सरकार में नौकरियां उतनी बढ़ती नहीं हैं। तो शायद 1000 में एक को मिले वो सरकारी नौकरी, जो बाकी 999 हैं उन्होंने ये जनरल नॉलेज और ये सब एक्चुअली रट्टा मारा, जिससे कि जिसका कोई बहुत बड़ा फायदा होता नहीं है उनको। तो जब ये 20 साल से, अच्छा 18 के उम्र में उन्होंने यूनिवर्सिटी शुरू किया, 20 साल की, एक ये दशक जो है, एक दशक सिर्फ रटने में, जनरल नॉलेज रटने में और सरकारी नौकरी के लिए प्रिपेयर करने में जब गुजर जाता है, तो एक दशक जो है उसमें जब आप अपनी काबिलियत बढ़ा सकते हैं रोजगार के लिए, प्राइवेट सेक्टर में काम करने के लिए, वो एक्चुअली पूरा एक वो जो अवसर है 10 साल में अपनी काबिलियत बढ़ाने का, वो अवसर जो है लुप्त हो जाता है। तो इसीलिए ये दूसरी बात है कि मतलब हमारे युवाओं को, जो युवा जिनको धीरज है, जिनको काबिलियत है, वो जरूर कंपनियां शुरू करें, रिस्क लें। लेकिन और हम वैसे युवा जो रोजगार करना चाहते हैं, तो वो ये इस धारणा में ना रहें कि अरे हम सरकारी नौकरी ही करेंगे, सरकारी नौकरी करेंगे तो सरकारी नौकरी में ही बोलबाला, जो भी है। एक्चुअली मैं प्राइवेट सेक्टर में काम किया हूं और सरकार में भी रहा हूं, तो मैंने देखा है कि एक्चुअली जिस तरह की आपकी जो अपॉर्चुनिटीज मिलते हैं, यदि आप काबिल हो, मेहनत करने में आप हिचकिचाते नहीं हो, तो प्राइवेट सेक्टर में, निजी क्षेत्र में जो आपको जितना जो प्रोत्साहन मिलता है, वो शायद सरकार में उतना ना मिले। तो ये भी एक माइंडसेट है, इसको बदलना जरूरी है। हमारे युवक जो हैं प्राइवेट सेक्टर में नौकरी के लिए, प्राइवेट सेक्टर में नौकरी चाहिए तो आपको ये जनरल नॉलेज रट के कि हमारे पहले प्रधानमंत्री कौन थे, पहले राष्ट्रपति कौन थे, या जो भी है, वो जनरल नॉलेज रट के आपको उससे कुछ फायदा नहीं होने वाला। आपको अपनी काबिलियत बढ़ानी पड़ेगी, जो भी आप जिस भी क्षेत्र में है उसमें आपको रोजगार की तरफ से काबिलियत बढ़ानी पड़ेगी। तो ये दूसरा एक दृष्टिकोण है, ये भी मैं कहना चाहता। लेकिन ओवरऑल हमारे जो युवक हैं, इसमें उनमें जो अभी आत्मविश्वास जो देखता हूँ कूट कूट के भरा है, ये मैं और यहाँ पे काफी सारे ऐसे लोग हैं जिन्होंने देश विदेश देखा है, हर देश के जो नागरिक हैं उनको देखा है, और मैंने वो देखने के बाद मुझे कोई संशय नहीं है कि भारतीय जो नागरिक, हमारे जो युवा हैं, वो उतने ही काबिल हैं, शायद और भी काबिल हैं बाकी देशों के मुकाबले। तो ये आत्मविश्वास जो है, उस आत्मविश्वास में बहुत दम है, और वो आत्मविश्वास सही भी है, क्योंकि ये जो हम लोगों ने देश विदेश देखा है, उससे एक्चुअली हम इसको सपोर्ट भी कर सकते हैं। तो आत्मविश्वास के साथ कंपनियां बनाएं और निजी क्षेत्र में रोजगार के लिए अपने आप को काबिल बनाएं। यही मेरा संदेश रहेगा हमारे युवक और युवतियों।
Praful?
यस एब्सोल्युटली आई एग्री विद प्रोफेसर कृष्णमूर्ति जी। एंड एक और चीज ना, देखो दो तीन चीजें हमें समझने की जरूरत है कि अभी जैसे सरकारी नौकरी की भी बात करी ना, तो मेजरली हमारे समाज में सरकारी नौकरी को भ्रम क्या फैलाना पड़ा कि सरकारी नौकरी लगने के बाद तो तुझे काम करना ही नहीं पड़ेगा। सो वी डू वर्क टू नॉट टू वर्क उसके बाद में। तो ये जो फिलोसॉफी जो सिंथेसिस दिया ना, ये प्रॉब्लम क्रिएट है। बोले कि सेटअप हो जाएगा, इसके बाद कोई दिक्कत नहीं है। दूसरा मुझे ऐसा लगता है कि जिस हिसाब से अभी प्राइम मिनिस्टर 2014 में उनकी लीडरशिप के बाद ना, आपने सुना होगा कि प्राइम मिनिस्टर ऑफिस हो गया या जो नेशनल लेवल के गवर्नमेंट ऑफिस है, वहाँ पे उनकी इफिशिएंसी बढ़ाने के लिए उनके आवर्स बढ़ाए गए, उनके ऊपर बहुत ज्यादा मॉनिटरिंग करी गई। तो ये आने वाले टाइम पे हर जगह होगा। आप ये समझो गवर्नमेंट जॉब भी जैसे सिंगापुर जैसी कंट्री को देखोगे तो वो भी कॉर्पोरेट की तरीके से काम करती है कि कैसे इफिशिएंसी निकाली जाए, कैसे 10 घंटे में ज्यादा काम हो जाए। केपीआई ओकेआर आजकल गवर्नमेंट ऑफिशियल्स वर्क में भी आ गए। तो ये यूथ को समझना है कि वहां पे भी जाके, आज आप बोल रहे हो गवर्नमेंट जॉब है, पर 2-5 साल में पूरा कॉर्पोरेट कल्चर किसी भी देश को अगर बढ़ाना है तो उसी से हो सकता है, और वहां पे आपकी इफिशिएंसी और आपसे और मेहनत करवाई जाएगी। तो अगर आप इस कल्चर के लिए जा रहे हो कि उसके बाद काम नहीं करना पड़ेगा, तो वो फिलोसॉफी और वो नैरेटिव गलत है। दूसरा मुझे ऐसा लगता है कि 2-3 चीजों की वजह से ना हमारा यूथ आज की तारीख में सरकारी नौकरी के अलावा दूसरी चीजों में रिस्क नहीं लेता। उसका एक कारण होता है रिस्क बहुत है, और इमेज का बहुत बड़ा कंसर्न होता है। फेलियर का डर हमारे देश में ना बहुत ज्यादा होता है कि मैं फेल हो गया तो क्या करूंगा, रिश्तेदार चिल्लाएंगे, गाली गलौच होगी। तो वो एक, और मैं हमेशा, भी मैंने एक पॉडकास्ट में भी बोला था कि हमारे देश में इमेज की चिंता उसको सबसे ज्यादा है जिसकी कोई इमेज ही नहीं है। वो अपने कैरेक्टर के ऊपर वो बहुत ज्यादा फोकस करता है या चिंतित है जिसका कोई कैरेक्टर नहीं है। आप समझ रहे हो? तो वी नीड टू अंडरस्टैंड कि, और हमारे एक मालवी में भाषा, आई कम फ्रॉम इंदौर रीजन, तो हमारे यहाँ पे बोलते हैं बीसे बुद्धि तीसे धन। तो बोले 30 तक तो तुम यही मत समझो कि तुम्हारा अस्तित्व है। 30 तक की उम्र तक ना तुम्हारा अस्तित्व ही नहीं है बॉस, क्योंकि आपका शादी नहीं होता है, आपके बच्चे वगैरह बड़े होंगे। तो 30 तक को आप बहुत ज्यादा सीरियस, मतलब उसके पहले का प्लेग्राउंड तैयार कर लो, उसके बाद आप बोलो तो चलेगा। तीसरा, मुझे ना बहुत ज्यादा कंपैरिजन इकोनॉमी में हम लोग चले जाते हैं कि रवि जी आगे, प्रफुल्ल आगे, रमेश आगे। तो वो जब तक एक फिलोसॉफिकल चेंज और एक नैरेटिव चेंज नहीं होगा, आई डोंट थिंक सो कि दे विल टेक मोर रिस्क। और आगे पीछे जाके एक चीज हमें समझना चाहिए कि बॉस, आने वाले टाइम पे ना लाइफ और ज्यादा महंगी, बहुत ज्यादा इन्फ्लेशन के थ्रू टफ होने वाली है। तो जितना ज्यादा आप अभी से मेहनत करने की आदत डाल लोगे, जितना ज्यादा अभी युवा में 20, 22, 25 में मेहनत कर लोगे तो 35 में कर पाओगे, 35 में मेहनत ज्यादा करोगे तो 45 में कर पाओगे। कोई भी आदमी 35-40 में उठ के खड़े नहीं हो जाता है बिस्तर से कि अब तो मैं दुनिया पलट दूंगा। तो इट ऑल स्टार्टेड एट अर्ली एज पॉसिबल। तो जितना अच्छा पौधा बीजोरोपण के रूप में अगर ग्रो करेगा, जितना ज्यादा उसको यू नो स्ट्रगल के थ्रू जाएगा, जितना ज्यादा उसका लाइफ इजी नहीं होगा, वो एक हो जाएगा। और एक ना पेरेंटल प्रॉब्लम भी मुझे लगता है कि एक हमारे देश में माँ बाप इसलिए मेहनत बहुत करते हैं कि बच्चे को मेहनत ना करना पड़े। तो एक वो भी फिलोसॉफिकल चेंज नैरेटिवली हमें चेंज करना पड़ेगा कि माँ बाप ने जो किया उनके लाइफ में उन्होंने किया। बाकी जैसे यूएस में कल्चर है 17-18 के बाद खुद को अपनी जॉब करनी है, घर से बाहर निकाल दो, थोड़ा खर्चा कम कर दो। तो वो चेंजेस थोड़े बहुत अगर होने लगेंगे तो यूथ विल टेक देयर ओन रिस्पॉन्सिबिलिटी ऑफ देयर ओन लाइफ।
Thank you so much, Praful. I just want to take a rain check with the professor. Now we've been going for 2.5 hours. Just let us know how your time is, because we have. Maybe I'll just ask a round of questions to people who didn't get a chance to ask. Sandeep, you've been here for some
Yeah.
time. Why don't you ask a question, Purnima ji, and then we'll see if we have some time left. Sandeep.
Uh, Ravi, I can go on for another maybe 10,
Oh,
15 minutes, but let me just quickly also add to, I think, see, प्रफुल्ल ने जो कहा उसमें एक चीज जो कहता हूँ, एक्चुअली उदाहरण जो अमेरिका वगैरह का, ये हमें बंद करना है यार। ये भी बहुत हुआ, ये हर हर चीज के लिए अमेरिका में 18 साल में नौकरी करना बोलते हैं, इसलिए अरे क्या जरूरत है हम लोगों को एक्चुअली। बाकी हमारी संस्कृति में इतना है एक्चुअली। मैं हमारे युवकों को कहूंगा कि एक्चुअली हमारी जो संस्कृति है उसमें बाकी कुछ ना करो तो थोड़ा भगवत गीता ही पढ़ लो यार, थोड़ा सा। क्योंकि अमेरिका से क्यों सीखे हम, एक्चुअली हमारे देश में है इतना इतना धरोहर। और यदि आप ये सोच विचार करो कि मानव जीवन का अर्थ क्या है। मानव जीवन का अर्थ तो मतलब आलसी होने के लिए तो नहीं पैदा हुए हम, मेहनत करने के लिए, कुछ कर गुजर जाने के लिए पैदा हुए हैं यार। तो यदि 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 प्रश्न यदि ये पूछें कि जानवरों में और इंसान में अंतर क्या है, इंसान के पास विवेक होता है, और विवेक को एक्चुअली उस विवेक को अच्छी तरह से इस्तेमाल करे तो कोई और मेहनत क्यों कराए। हम खुद अपना मेहनत करें ताकि अपना जीवन सार्थक करें, ये दृष्टिकोण होना चाहिए। यही ये दो बातें एक्चुअली मैं ज़रूर कहना चाहता था हमारे युवक को कि मेहनत करने में एक्चुअली और ये मैं तो मैं अपना एक मैं खुद पिता हूँ, मेरे दो 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 बच्चे हैं, मैंने कभी नहीं कहा कि अरे हम आपके लिए मेहनत करेंगे। मैंने नहीं, आपको भी मेहनत करना है कि हम भी जितना भी जो आया है वो मेहनत करके। हमारे पापा हमको कहते थे कि यदि बेटा कुछ करना है तो मेहनत करना है। ये नहीं होगा कि आपको एक्चुअली सारे आपको गाड़ी चाहिए, बाड़ी चाहिए, बंगला चाहिए, पोस्ट चाहिए, नाम चाहिए और एक्चुअली आप मेहनत नहीं करोगे। देयर इज नो फ्री लंच जैसे कहते हैं एक्चुअली, कि यदि आपको ये सब चाहिए तो एक्चुअली मेहनत करने के लिए तैयार रहो, सैक्रिफाइस करना ही पड़ता है। तो ये दृष्टिकोण जो है हमारे युवक में रहना जरूरी है। और इसमें यह भी कहूंगा कि एक्चुअली बाकी किसी देशों को देखने की जरूरत नहीं है। हमारे इसमें थोड़ा सा, जब भारतीय हम पैदा होते हैं तो हमारी जो जो सांस्कृतिक धरोहर, हमारी जो वेदांतिक जो धरोहर है, वो एक अथाह सागर है और अमृत का सागर है। उसमें एक बूंद तो चखो, एक बूंद चख कर उसमें एक्चुअली उसमें उससे जो आनंद आता है, उससे जो जीवन में जो जो बदलाव आता है, उसको उसको महसूस करो। यही मेरा हमारे हमारे युवक से एक प्रार्थना होगी।
Thank you very much, Professor Krishnamurthy. Let me give the floor to, we have Sandeep. I don't know, Sandeep Lakhina. If you've been here for some time, अगर आप कुछ पूछना चाहें, उसके बाद हम लोग will start winding the space. Sandeep and Purnima ji, do you want to ask any question?
Thank you, Ravi. Thank you, everybody. Good evening, Professor. I just realized we lived in the same city for a while around the same time. I also happened to work with Professor Sethi in Emory on a couple of projects when I was working in Coke, so that's very coincidental. But anyway, coming to my question, while we're looking at the growth of India and we're looking at some really wonderful things happening in the next 2 or 3 decades, one of the questions I have is around the inequality of growth and how we are looking at the overall poverty situation. So, I don't know if you looked at the Brookings report that came out recently, which talks about the abject poverty literally going away to 2%, which is the $1.9 threshold.
I referred to
Yeah,
it in one of the questions. I actually talked about that precise Brookings report, saying how poverty has reduced, even inequality, both urban and rural inequality, as measured using the Gini coefficient, has
sure. So
decreased.
maybe I missed that part. I'm sorry. So I think my question was that, there is a World Bank report which is a little different from that, which talks about at the $1.9 level, we are at a 10%. And if you look at the next benchmark, which is the $3.2 level, we have almost a 40% or 45% population, which is below that. Similarly, if you look at the Brookings report, they are taking that number at about 22 odd percent. So my question is that, what are the things that we can do as a country, as a society, as a community, which will really help us to make sure that the inequality of growth is not that high? Because if you're looking at a 20%, 30% number below a $3.2 threshold, I mean, in terms of population, that's a huge, huge mass space. So if you could talk about some of the things we can do to really, help that and grow that in a better way.
Can I just request we just take two more questions, and then if you could collectively take that. So Babuji
Yeah.
is in Canada. Welcome, and Kurang and Babuji, if you want to ask your question, and Kurang.
Oh, thank you. Jai Jai Shri Krishna, Jai Jai Shri Krishna, Jai Jai Shri Krishna. Thank you. Yeah, amazing space, no doubt about it. And then even with the red flags, as compared to China, what India has, lot many red flags. And then, it's not a rocket science to understand. And I appreciate, I love, and feel very motivated that India is going, leaps and bounds. I just have a very pointed question since I am a citizen of Canada, born in India, but I'm talking about the Canadian interest. So my question is very simple. What is the current GDP to debt ratio? And what is the overall credit debt of India? These questions are related to Canadian economy, which is in a turbulent times. We have a 3 trillion credit debt. And then the second part is that if someone can help me to understand that, is there any outreach from the ministry government to reach Canadian, because Canadian political situation is really troubling. but related to my energy sector and the technology in Alberta, Saskatchewan. Is there any talks to reaching outreach to Canada? Otherwise, we're in a big shit, man.
Okay, Babuji, it's interesting. An article just came out yesterday on the India energy sector. I'll tweet it yesterday. I actually quoted some interesting things from India. But let me go to Sandeep. Sandeep, you ask a question, then we give to Professor G, and then we'll wind up. Sandeep, over to you.
Yeah, thank you, Ravi. I just want to say that we should also have a follow-up session, perhaps if Professor is free. We have so many questions. Let me ask him a quick question I have. This is regarding the capital controls and the free lack of free floating rupee. Professor, how much of an impediment these two are for incoming investment, both equity and debt, and how much of effect this is having at the high interest rates we have in India? And do you foresee in some time in future these two will be capital controls as well as rupee will be free floating? If that happens, is rupee perhaps going to weaken a little bit? That will be probably good for exports. What are your thoughts on that? I mean, at some point of time, India needs to do this, especially if it wants to be one of the reserve currencies. Can you please share your thoughts on these aspects?
Yeah. So the first question on inequality, I think the Brookings report looks at these numbers very carefully, and in fact, the author of that report is my predecessor in this role, Dr. Sujit Bhalla, and he had written a paper, IMF working paper as well, and showed that poverty has reduced significantly. So I think the numbers that you seem to be quoting are dated. If by taking into account the World Bank line, in per capita, PPP terms, he has shown that there's been significant decline both using the dollar 1.9 and the dollar 3.2. That 40% number is not what so that isn't correct. So there has been a historic decline. But more from a policy level now. So that was just to correct. I don't think that those numbers are correct. What we need to do, given the historic decline that has happened in poverty and in inequality, both urban and rural areas, we need to continue the same, which is growth should be. While we should be focusing on policies that enhance growth at the macroeconomic level, we also should be utilizing things like the public digital infrastructure, and other programs to make sure welfare spending is actually well directed, reduce pilferage, what the government has been doing, and provide basic amenities, provide good insurance. Stuff that's been done in the last decade or so should be continued. That will ensure that growth is relatively even, and that we don't have to just depend on trickle down for poverty and inequality reduce. And I think in and itself, absolute poverty has become very less, and that's because of the policies over the last 10 years. The second question on Canada, I must admit, I don't track the Canadian economy that carefully, so I can't comment on Canada. And if I think if the question, at least one of the questions was about the debt to GDP ratio for India, here let me utilize this opportunity. Some people, you'll see some comments basically which use the actual absolute level of debt, saying, oh, debt has increased from this much to this much. I think that is incorrect. That is erroneous, because you have to normalize that number, and you have to look at debt to GDP ratio. And the debt to GDP ratio, after increasing during COVID, because tax revenues in that year were lower, and we had to actually do the demand side measures, and we had predicted this in the 2020-21 economic survey, that after increasing, the debt to GDP ratio increasing in COVID year, it will decline, because the growth rate of GDP for is far higher than the rate at which the government borrows. So we basically will reduce the debt to GDP ratio. And that is exactly what has happened now. Debt to GDP ratio is 81%. It has come down to 81%. So those that talk about debt situation, etc., being in sort of do some fear mongering on debt to GDP ratio for India are off the mark. On the capital controls and exports, etc., see, I think it's important that the Asian financial crisis highlighted that removing all capital controls is certainly not a very good policy, because that exposes the country to far more vulnerabilities and shocks. Global shocks have a far significant impact. And so I, as an economist, would not be recommending removing all capital controls. I think this is an area where we should be progressing carefully and very, very deliberately. As for exports, the impact of the depreciated rupee, I think we end up overblowing or overemphasizing the impact of rupee depreciation on exports. I think our firms, Indian firms, should be competing in global markets based on their on their own competitive, how well they are able to compete on their own, by reducing their cost of production, or maybe at the same cost of production, coming up with better goods, better quality goods. And I think policy should also be supportive, as we discussed earlier, in enabling this. But I don't think the depreciated rupee is something that helps very much. If you take a look at, just take China and India. If you look at from 1990 to 2020, for a long period, the Chinese currency was basically pegged. There was no depreciation of the Chinese currency. In contrast, India depreciated. The rupee depreciated at 3.5%, sometimes even 4% on average. And yet, the Chinese exports grew far more than Indian exports, which actually again emphasizes the point that making our export-oriented firms, our goods and services, competitive, is that should be the emphasis, rather than the currency depreciation. So even from an export perspective, any potential impact of changes in the in capital controls, etc., to me, that I don't think that important.
Thank you so much, Professor Krishnamurthy. We've been going for almost 3 hours now. I just want to say that, it's with a lot of gratitude to everybody. But before we wind up, could you just talk about the book that is coming, and, without revealing too much? And, there will be, as we said, we'll definitely have a space when you announce the book, because we're very, very excited. And I think for us, it'll be such a critical tool, really, to really give that calculation. And I will not tweet, as I promised. So I will keep that promise. So please, if you could just say a few words.
Yeah, the book. So the draft of the book is ready. It's going through the process. Hopefully, it should be coming out, in June. So the title of the book is India at 100. India at the rate sign 100. Subtitle is Envisioning Tomorrow's Economic Powerhouse. And I gave a sort of a little preview into that, when we talked about what will be the size of the economy in 2047. And that's the first chapter in the book, which is that if India can grow at 8%, we can be a $55 trillion economy in 2047. And I explained the logic of that while answering one of the earlier questions. The rest of the book is basically about what are the policies that India needs to implement to be able to grow consistently at 8%. It's a four-pillared strategy, with four pillars that India needs to work on to be able to grow consistently at 8%, and thereby be a $55 trillion economy in 2047. That's sort of the gist of the book.
Thank you so much. I still remember, last year when we started the spaces and we said India 2047. 30 trillion, some people laughed and they were like, what's wrong with these guys? And clearly you have proven us wrong, because we were clearly wrong on 30 trillion. It's going to be 50 trillion, as you have clearly, calculated and compounded, and explained today. I think with that high note, just want to thank you, because this is one of the longest spaces. And I will, before we wind up, just give Vibhuti our co-host, to just say a few words. Vibhuti.
As a co-host, thank you, Ravi ji, for hosting this place. And Subbu, it has been wonderful listening to you. I had commitments in between, so I stepped out. But basically, I'm totally in alignment with you. Uh, the one element that was critical is the job change and the outlook that you were commenting upon, that people are driven to become a nokri, and the culture of entrepreneurship has to come in India. And for that culture of entrepreneurship to come to India, we have to return to re-establishing the Varna process, through which we were known for what we did, not what our caste was. And that's what is important for for the social cultural change, mind shift to happen in India. I just want to recall one quick snap. In Delhi, I was being driven around in the Uber car, and it was an elderly gentleman, and I asked him, "कब से गाड़ी चला रहे हैं?" He said कि पिछले 5 सालों से चला रहे हैं. इसके पहले आपने क्या किया, क्या करते थे? सर, हम चमार थे. तो मैंने कहा कि चमारगिरी छोड़ी क्यों? सर, नौकरी करनी थी. तो मैंने कहा कि भगवान ने आपको हुनर दी थी चप्पल बनाने की, और आपके चप्पल बनाने से मेरे पांव के तलवे में खरोच नहीं आती है. तो मैंने उनसे ये कहा कि आई विश यू हैड ट्राइड टू रिटेन योर एफिशिएंसी इन मेकिंग चप्पल. एंड आई सेड टू हिम that in the next Janam, I will ask Bhagwan to make me a chamar with a Nike ability to develop shoes and everything else. That cultural shift that needs to happen to encourage people to do what they are best at. And that's what is important for India to achieve its demographic dividend. And there is a sincere need for a policy prescription change, that it is not caste, but Varna that defines us who we are. Thank you very much, Subhuji, and delighted to be with you. Good to meet you here. Hopefully, our conversation will continue in future. Thank you so much for joining us today. My personal gratitude.
Thank you so much, Ravi. Thanks for taking the initiative in to organize this space. I absolutely enjoyed. I think the questions were very insightful, and I really enjoyed sharing my perspectives. Thanks for organizing it. Thanks, Aditya and others also for and Vibhuti ji for co-hosting it. Thanks a lot. I once again gratitude from the bottom of
No,
my
and the
heart.
gratitude is from us, and we are so fortunate that you took time out, because we have been relentless on really portraying the India's 2047 journey. And as you said, the journey has just begun. Just want to give the point to everybody that we are hosting the India 2047 with the Council General of India on May 21st. So if you're in New York area, or the East Coast or USA, please block 5 p.m. to 8 p.m. We'll have the Council General hosting us on Green Growth, and where we'll be co-hosting as India 2047 along with some others, talking about the green growth opportunity in India. And I've already requested Professor Krishnamurthy if he will be available to do a keynote that day, and of course I'm going to DM him more details. We will be also doing more spaces, and hopefully once we know the date for the book, we will definitely do a very deep dive into each chapter of the book. Maybe it'll be a series. We will probably do. I will come back to you with those details. But again, all of us are so excited. This has been fantastic. We can go on, but just want to thank you. You've been going on for 3 hours. This is more than the IMF panel, right? The panel's finished in 60 minutes. This is 3 hours Bollywood movie of India at 100, completely. And maybe we can, I was going to say, make us, can end with a song, but I think that'll become probably cheesy. But really, thank you so much from all of us, from all the co hosts and all the listeners. And I had the privilege to listen to, Professor's amazing voice. Maybe that'll be another chill out session we will do.
Thank you
Okay,
so
thank you
much.
so much. Really, really, really appreciate it. Thank you to Vibhuti ji. Thank you, Aditya. Thank you, Vinay. Thank you, Sandeep. and Miniji and Purnima ji and everybody else, Babuji, Vivek ji, who's been listening very much in the backgrounds, and to Korang to share some very important data points and the articles that Professor was sharing. So we have tried to post them. Please repost, follow Professor, follow the co-host, the speakers, and everybody else, because it's from the strength to strength. That's how we will grow. But one thing which I always feel happy about spaces like this is we get Indian community joining us from all the way to Australia to Canada, and that's the range that has been, and that's going to be a very, very big advantage, and then we have this intergenerational from Vibhuti who's like a teacher and a mentor to many of us, to young people like Praful and Aditya, who are in their 20s and taking and driving this forward. With that note, thank you, and see you soon. Thank you.
Bye.
Bye-bye.